Hi everyone, we are live on this trading webinar. You should be able to see my screen. Feel free to read that little bit of text as we get ready for this. Let me know that you can see and hear me loud and clear, please. Tell me where you're from as well. I also want to do some polls that I want to run so we make it interactive. I've completely revamped this webinar. I want to do it slightly differently. I want to do it in a way where it's really focused on giving you the strategic rules so that you can write them down. So please have a pen and paper handy and have one of these things, a phone ready, so you can take some screenshots, because you're going to miss certain things because I have to go at a fairly quick pace because I don't want to keep you any longer than you need to be here. So please have a phone ready so that you can take screenshots. Okay, hey Ravi, hi, welcome my friend. Hello everyone else as you're coming on. Some names I recognize indeed. Sharon, Vladislav, Surjit, Peter, Orenad, Roland, David, Spencer, Gordon, Side, Eric, Peter, Eric, Edward, Dudley, Mike, Maz, Simon, Irina. We've got a whole bunch all coming on now. Sat, David, Yorgis, Mitz, Dave, Amin, Nicholas. Okay, welcome all of you, one and all. You can all hear me clearly. That must be the case. So let's get on with it. The reason I put that text up there is this. The reason I teach all of this is not for the goodness of my health. It is because for the last 20 years since I wrote the books, the Financial Times columns, the Bloomberg TV stuff, this has been the way in which I myself became socially mobile. Okay, I was born in Leeds, in Armley, and if you know it, you'll know it's not the richest part of the world. I want people to know how to do this activity, or at least not to get it wrong. It's as simple as that. Hi, Hornchurch. I think you said tier 4 last time. We still are. Hello, Edward. How do you do, my friend? Okay, so, and that's the passion behind it. That's the reason behind it. It is the thing which has been the driving force behind all the books. I'm going to give you the best bits of all those books in this webinar. Now, I know I say this all the time in all my webinars, but I really want to drive it home, okay? The best bits of every single book that I've written on trading. They've been published by the FT and they've been published in multiple languages. Okay, so there you go, Financial Times over there. And the reason this is really important that you know this is because you need to know where the information is coming from. In the internet today, there is just way too much nonsense when it comes to trading and investing. Hey, Dimpy. And that's why I've been giving talks, I've been giving webinars, I've been writing books on this subject, all right? And one thing I can tell you is you don't write books to get rich. I can assure you that, because the publishers get all the money, especially when they are the Financial Times. Even if they're international bestsellers, you write them because you're passionate about a subject and you want to discuss something. So all the best parts of this has been distilled in this webinar. And the reason I keep banging on about this is so that you know, first of all, authority, and also you know that I'm going to save you about 30 hours worth of time, because you don't have to read any of those books or any other trading book ever again. There you go. I keep pointing them out. And when the publisher's the FT, you know it's bloody good quality as well. All right. Now, you might think, well, you're banging on and on and on about it. There's a reason the FT translated it into Russian and all the other languages. I've never done this before in any webinar or any talk. I've never shown the Russian edition, I think it's Russian, of my books, okay? And again, the reason is, as you're all settling in, grabbing your pen and paper, grabbing a drink, all the rest of it, the key point is, for me, and I think for the whole world, it can be a way of just having an extra side income. It can be social mobility. For me, it became a full-time occupation. I used to be a barrister. It became a full-time occupation. All right. So, hi, Raj. So that's the reason why. So let's get on with the important part. This is not individual financial advice, because I don't know you individually. So I'm going to show you some trades in a second. I'm looking at euros, dollars, Amazon. I'm even looking at Bitcoin because people ask me to. Dow, FTSE, NASDAQ, Google. It doesn't mean what I'm going to show you on screen, you immediately go and buy. All right, I'm going to show you these, but I'm going to show you more importantly the process by which you buy them. So if you're interested, we're long on Google at the moment, and we are short, just gone short on the FTSE. Please make a note of that. Just gone short on the FTSE, okay? So you can make a note of that, and you can sort of, it'll give you an idea of, okay, what are we looking at? Why are we looking at stuff on that? All right, so on the 1 hour time frame, we are long still the FTSE. On the 30-minute, we're short. I'll explain all of that as well. And we are short on the Dow, okay, just so you know all of this. Now, we'll come back to all of that in a second. Okay, so you should have read that information on the screen, should have had ample time to read that by now. All right, so let's move on to the next part. The next part is this: why do people trade? Really quickly, Vladislav, Putin is reading your books. Vladislav, somehow I don't think you're even joking. Okay, Spencer will come to that as well in 1 second. The whole issue about cryptos and should you even go near them, all right? We'll come to that because it's a whole section. I'll do that in the Q&A section. You're absolutely right. You just got to be really careful. Why people trade? Look, side income, but we're going to cap that to £500 a month. We're not going to try and do, oh, here's how you make 10,000, because every single webinar I give, and this is really important you understand this, right? We've got to learn the skill first before we do anything with live cash, right? And we've got to start with the smallest sums first so we master the skills. So we're not worried about the money, we're worried about the skill. You can only worry about one thing at a time in life. Worry about the skill, not the money. Okay, so we're going to start with a demo account. Some months we'll make more, other months we make less. The months we make more, we save for the months in which we make less. The reason people do it, they often tell me, so that's why I say in quotes, they'll say to me, oh, Alpesh, I'm doing it for school fees, pension, rent, mortgage, kids' fees, whatever. We are only going to use risk capital. Let me be that clear. And what's risk capital? Risk capital is money that were you to lose would not affect your ability to pay school fees, pension, rent, mortgage, okay, or look after your kids. That should be obvious. That should be responsible and sensible. But in case it isn't for anybody, I'm really making that clear to you. My new staff, in my head, whenever we hire somebody new, we haven't hired somebody for at least a year now, but anyway, when we hire new staff, they start with $1,000 account of my money. They obviously don't have client money. They start with $1,000 account. Be absolutely clear. You do not go and give new people who you're teaching to trade. You don't say to them, here's 10,000, here's 10 million. Go have fun. Go play with it. Can you imagine? Put a gun to my head if I ever did that. Why? Because they're focused on learning the skill first, right? And they risk losing £20 on any individual trade, max. Now you might think, oh, no, you're never going to get rich. Listen, if you can't learn with the small sums and learn and master the skills, okay, then you're never going to make anything with big money ever, right? If you think it's about the money, you're wrong. It's about learning the process. Please write that down. Please write that down. Like all success in life, it is not about the money. It is learning the process first and being passionate about the process. Okay, and the process is what I'm going to teach you. The other reason people do trading, freedom, fulfillment, funds, the 3 Fs. I was talking about that. The other reason right now people are doing New Year's resolutions, they're more motivated, they're more determined, they're more socially mobile. They've got a bit of momentum behind them, and it's the best time to learn because this week, the week before New Year's and just into New Year's, people are committed. If they commit themselves during that period, they're going to learn. All right, they're going to learn better because they're going to have the time and the motivation. Time and motivation are two most important things as well. Alan, I come to SPACs. A friend of mine, she's just become a bloody billionaire off a SPAC. Her name's Kyte Fisker. And she's married to Henrik, and they've just done a SPAC, and she's become a billionaire off the back of it. But I'll talk about IPO investing later on, because I'm talking about trading at the moment. But Alan, I'm going to answer everybody's questions, including Spencer, yours on cryptocurrencies, and whether or not they're appropriate for retail clients. And by the way, Spencer, I don't think they are, but the reason I'm showing them is because people have asked me, can you just show me cryptos as well? And Alan, SPACs or IPOs, high risk. IPOs generally anyway, but I'll come to that in a second. All right, watch to the end. I've got a little gift for you. The little gift is, well, I'll tell you, it's one of my books. Okay, you're going to be able to get it. It's an international best-selling book. I've forgone. I don't know why I didn't do this sooner. I won't receive the royalties, the puny, out of £25 on a book sale, I probably get about £2 in royalties. What the hell do I care? So I've decided I'm not going to take the royalties. I'm just going to give you the book for free instead. So that's at the end, right? Rule number 1. We're going to follow what the best do. In anything in life, if you want to succeed, including trading, follow the best. That was my problem when I was a student. I wanted to trade because I didn't want to be a lawyer. Okay, I didn't want to be shackled 9 to 5 to the desk and all the rest of it. It was longer hours than that. And I wanted to be a trader. I wanted freedom, fulfillment. And I thought, shit, well, I better follow the best. How do I get my hands on the best? And by the best, I mean people like this. Okay, we're going to copy the same kind of trading these people do. Right? These are the best in the world at what they do. They all do one type of trading, and it's the most suitable trading to private investors, I believe. Okay, and the reason I think, Werner, I'll come to Airbnb as well. Tanya, I will indeed. Tanya, of course I will. The thing, the type of trading they all do is, you might have heard of it, momentum or trend following. Okay, the reason it's simple simplest for private investors is because, well, as I'm going to show you from some of the slides from other hedge funds, it's really easy to for private investors to do. Most other types of trading, you're not going to do high frequency trading. We don't even do it. By the way, our fund does it. My favorite people out of this, David Harding, and the reason is he's British and he's the founder of Winton. Okay. I also like Man Group, right? Really big favorite. And John W. Henry, because although he's American, he's a hedge fund manager who bought Liverpool. So it's a British company. He's invested in Britain. Love him. Right. All of these people, they do the same kind of trading. And these are the people, they're not private investors, by the way. They're all hedge fund managers. In case you hadn't worked it out, they're all hedge fund managers. So when I wanted to learn how to trade, I thought, well, I need to copy these people. So I need to get my hands on them. And the way I did it is I wrote the book. I'm not plugging the book. Honestly, I don't need the £2 royalties. Thank you very much. And I'll give you the best bits of the books in this webinar. So I approached 10 of the world's leading traders, including that guy there, Bill Lipschutz, whose boss was Warren Buffett at the time. Bill was global head of foreign exchange trading at Salomon Brothers. Lessons in trading strategy from the world's leading traders, and that's what I'm sharing with you on this webinar. Okay, so I've been sharing it on my FT columns and in all my books. So by watching this webinar, you're saving yourselves hundreds of hours of going to web conferences, reading books, and everything else. Everything in this webinar is lessons in trading strategy from the world's leading traders, as published in my book by the Financial Times and in my 18 other blasted books as well. Okay, none of which you ever need to read. Alpesh, you're never going to make it as a rich publisher, as a rich author. No, I'm not. What a sad shame. Okay, so I'm going to give you all of that in this. Just so now you know what the hell we're here for and why we're here. And my story was this. My overnight success took a bloody lifetime, but it all came from trading. And that's why I'm so passionate about trading, and I want other people to know about it. If you're passionate about something, I don't know, you might be an evangelical Christian. If you're passionate, you want to tell other people. If you're a follower of Hare Krishna, you want to tell other people. Well, I'm religiously passionate about trading. Okay, it's the same thing. Without which I would not be on Newsnight. I would not be meeting presidents. I would not be meeting royalty. I would not be on Sky News. Okay, it just wouldn't happen. I would not have newspaper columns written about me. I would not have Barclays doing my book launches, right? So for me, trading is life. It's everything. It is my passion, and I want to teach you that. So let's get on with teaching you the strategies, okay? Here we go. One of the best hedge funds in the world released a video on demystifying what they do. Man AHL, right? One of my favorites. And I got to tell you, I'm going to use one of their strategies. It's what we do. We just copy what the best do. In anything in life, copy what the best do, and you will be like the best. Call it NLP, Neuro-Linguistic Programming, call it whatever the hell you want. Tina has made a very good point. Thanks a lot. So the list is very interesting. All men, they are. In the hedge fund industry, largely it is male-dominated. And they tend to be, right at the top, they tend to have been, or are still, men. Okay, the irony of that is research shows women make better traders than men. And I've written about this. Women, the research shows, make better traders. Ironically, men end up at the top of hedge funds. Whole different conversation to be had. We can have that later on. But you're absolutely right. It is the case that all of those were men, and the vast majority in the hedge fund, I think it's about 90%, if not 98%, are men. There are a few women who've made it to the top. And there's a whole load of reasons why they haven't, one of which will be, guess what, sexism will indeed be one reason why they haven't, okay? There'll be other reasons. We're not going to go into all of that. This is a slide from Winton Capital. It's a $350 billion hedge fund. It's the best way to explain what I do. Instead of showing you a slide from what we do, this is it, okay? This is it, okay? Tina, actually, I'll speak to you a bit later about that. Otherwise, we're going to get distracted. Right, this is all we do, and this is the kind of trading I think you should be doing. And the reason is it is the simplest for private investors. It doesn't mean just because somebody comes along and said, hey, you should be a trend follower, you should follow them and what they're doing. Because most people, if you look at it on the internet, haven't got a bloody clue about what this is. They're all trying to do shortcuts. They haven't written the books. They haven't spent 25 years in the industry. They haven't met the world's leading traders and followed them, been mentored by them, and then they haven't set up their own hedge funds. All they're trying to do is shortcut it and get on the internet and say, hey guys, follow me, I've got some secret formula. Bullshit. All right, so this is what we're going to do, and we're stolen a slide from Winton Capital. This is what they showcase to their private investors. Right, trend starts here. We don't get in there because we don't have a crystal ball. We don't get in any earlier either. Write this down. We don't get in earlier because we are not gamblers. If we try to get in before the market turned, we would be gamblers, okay? If we tried to pick the bottom, right, we'd need a crystal ball or a time machine. Instead, we get in after a bit of a lag. Now, for those of you who think, lag, that's rubbish, you must be rubbish. Well, on my side of the argument is a $350 billion hedge fund. Who have you got on your side? Right? It's as simple as that. And it's the same when we exit. The great thing about trading like this and the trend following part is it relieves a lot of pressure on you to try and be right on your timing and try and be right on your trades and trying to outsmart the rest of the market, because you're not outsmarting the market. All you're doing is letting the market go in the direction it is and riding their coattails. Okay, that's what we're talking about. So how the hell are we going to measure the strength of that momentum? How do we know it's turning around? There's many different ways. The way Bill Lipschutz, I told you one of my mentors earlier, he's not the only one. I can find the various books. There were a whole bunch of others, professional traders who taught me what they taught me, and like I said, FT and all the rest of it. And I've listed it there. The one way in which he taught me was this, which is we're going to measure how close the price closes to the high in any given period. Now, remember why we're doing all of this, to make money, right? So that should grab your attention right there. And what Bill said to me is, look, if you measure how close the price closes to the high in any given period, that's a measure of momentum. For instance, you know, it's like those TV auctions. I've got something at 50. Anybody give me 60? I've got 60. Anybody give me 70? I've got 70. Anybody give me 80? Okay. And so on. Lee's made a great point. Markets range more often than trend. That's right. They range 80% of the time. So 80% of the time, you're going to be sitting on your hands, Lee. That's correct. Okay. As well. Gary, I don't know what that is though. I don't know what that is. Thanks, Dippy made money. She's over the moon. We'll talk a bit later. Okay. Why did he say, I'm going to ignore the comments just for a short while so I make some progress, as it were, on the slide. So forgive me if I don't answer your questions immediately. Okay. And the reason he said this is because there's momentum, there's a bit of a push. And the point was, if the price closes higher each period and closes near the high in each period, then there's an increased probability in the next period it's going to move up. Not a certainty, but an increased probability. All we're trying to do is find moments when there's an increased probability of a move up, or the converse also being true of a move down. Let me show you this. This is a retail platform, which is freely available. It's free. Okay. So, and it's broker independent. It can be, lots of brokers offer this. So that's not the point. The point is simply this. I'm showing you on a retail platform how and why and what I'm talking about. So if it's a market fall, all we're looking for is when there's an increased probability, it might fall. Now, if it goes sideways as it does there, we're not going to be in the market. So what are we going to do, Alpesh? Are we just going to sit on our backsides for the rest of, for ages and ages and ages? No, we're going to, as I'm going to show you in a second, we're going to make sure there's a range of products we scan and we only place one trade, one per day, so that we're not, first of all, sitting on our backsides. We're not in front of the screen all the time, because in about 15 minutes you can find one trade and then you move along. So you focus on quality, not quantity. I'll recap all of that. Don't worry. I'll recap all of it. My point is, the end goal we're trying to get to is a higher probability of a move up, not a certainty, a higher probability. Okay. And so Bill said to me, well, the way I want you to try and find that, because I was a poor student, remember, at the time, when I met the global head of foreign exchange at Salomon Brothers, okay, I was a poor student. So how do we measure that? How do we know it's worth measuring? How do we know it's any good? How do we know we're about to get the start of that? Remember? And it wasn't just him. We were looking at the advice on all of these people, all the traders, okay, that I spoke to and mentored me. And ultimately he said, look, you're a student, so you're not going to use some secret high-octane supercomputer. And I said, yeah, you're right. You're going to have to use things which are already out there. So he said, what you're going to do is, instead of looking for any one indicator, because no one indicator which is freely available works, okay? And by the way, you could be doing this. When it comes to this, it could be Forex, it could be options, it could be CFD, spread bets, or buying the underlying asset. It doesn't matter, because everything is about buying low, selling high. Whether you buy low, sell high by doing a futures trade or a Forex trade or a stock investment or a CFD or a spread bet, ultimately you're buying low, selling high. It's the underlying you're looking at. How you execute that trade, that's irrelevant in many ways. What's important is, am I buying low, selling high, or shorting, which is selling high, buying low? Got it? Right? So in a way, it doesn't matter what the product is through which we're doing it. Of course, there's an issue about leverage. We can talk about that later. And we want to use the least leverage. Okay, I'm going to give you certain rules on risk management. Least possible leverage, smallest possible account size, smallest possible trade size. Why are you so boring? Well, it's not me. It's the leading traders in the world. Okay, as a proportion of their capital, they use the minimal amount. Why? Well, because they didn't have a crystal ball to get every trade right. I thought they were going to say to me, oh, Alpesh, every trade we do, we just get it right. We're just amazing. That's how you do it. We've got a secret formula. Here it is, Alpesh, and we make only big winning trades. I wish. No, they don't. If you don't believe me, buy George Soros's book, The Alchemy of Finance. In the diary, he's right 50% of the time, and he's wrong 50% of the time. The times he's right, he makes more money than when he's wrong, because he gets out quickly if he's wrong, and he lets his profits run if he's right. That's obvious, okay? That's obvious if you know anything about trading. So how do we do this? So Bill said to me, well, what we're going to do is you're going to have to use indicators which are out there, but you're going to have to use them in a way that other people don't. In other words, you're not just going to use one indicator, because no one indicator works all the time. Listen to me carefully. No one indicator works all the time. So you're going to use multiple indicators, but you're not going to use them the way the textbooks do. Otherwise, textbook authors would be hedge fund managers, right? You're not going to use them the way textbooks do. Secondly, you're not just going to look to see, do those indicators indicate, for instance, higher lows, higher highs? Is the price closing near the high? Is the price off its lows, etc., etc., all of which are different indications of momentum. There's many different indications of momentum. Okay, many different indications. So he said, what you're going to do is you're going to make sure that multiple indications show not just higher lows, but higher highs. Is the price closing near the high? And I'm simplifying things slightly, okay? And is the price closing well above the low and closer to, etc. Anyway, multiple ways of doing it. And I said, how am I going to do that? He said, well, it's a bit more complicated than that, because all hedge funds do this, by the way. They use multiple indications. They don't, now, which indications they use might vary, okay, to their proprietary secret source. But all of them use multiple indicators. So we're going to use multiple indicators, not the way textbooks do. And he said, what you're going to do is not just in the time frame you're looking at, and I'm going to tell you in a second which time frame you as private investors should focus on. If you've got a day job, I'm going to explain to you why you shouldn't be looking at daily charts, because they're too delayed. Okay, I'm going to tell you how many instruments you should look at. So just bear with me before you ask all the questions. All right. What we're going to do instead, I'm going to come back to the questions in a second. I'm going to come back to the seconds in a second, because I want to progress with this. But feel free to keep writing the questions. Okay. So what we're going to do instead is not just look at the time frame we want to trade on, but the next time frame along as well, i.e. multiple time frames, the next time frame. Why? Because if there is an indication of an upward trend in the time frame we're looking at, but also a longer term time frame, then the likelihood, and write this down, the likelihood of a bigger move and the probability of it has increased. Not my words, the research shows it. There's been a lot of research done from Citibank on trend following. I was an expert witness in a high court case led by a chap called Raj Gill, who's a friend of mine, against Man Financial, where I proved in the high court as an expert witness that the research proves this, okay? So he won £21 million because the broker had screwed him over. And we'll talk about brokers screwing people over later and how to avoid it. I might be the only one in a high court who's proven what I'm teaching you now, okay? He made the front page of the FT as a result. So what happened is this. Multiple time frames increases the probability of a bigger move, right? This is just the academic. I'll give you the exact rules in a second. And the third thing he said is we need price confirmation. We need the price to move. There's no point being the cleverest person in the room, right? While the price is falling, saying, oh, I'm going to bet it's going to rebound. Why would you do that? That's like catching a falling knife. That is high risk. That is gambling. That is getting in ahead of the news or the move, in which case go to Ladbrokes. Okay, we don't gamble. We wait for price confirmation, which is usually a 2-period high. I'm going to tell you which timeframes are the best for private investors in a second. I'm going to prove the research and the maths behind it in a second. second as well. I've published everything that I'm saying, being published by the FT as well. So you've got those credentials. Okay. PC is price confirmation. There's something called PR in a second, but it's not that important for you guys. Don't worry. It's what we do. You don't need to do it, but I'll explain what that is. Now, the indicators, because none of them work all the time, because I was a poor student, I had to use the ones which were out there, which were freely out there. Okay. I mean, no is the answer to that question. Okay. Right. Rising. So I had to use what was out there. MACD, stochastic, RSI. Well, wait a minute, Alpesh. First of all, they're really old. You're right. They're really rubbish. You're right. Why the hell would you be using them? Well, we weren't. We were using multiple indicators, not the way the textbooks do, because all of these indicators, what they measured in different ways was where the price was making higher lows, higher highs, and closing near its high. But that wasn't enough. That won't make you money. That will, let me say that again, that will not make you money. So whilst we use multiple indicators, because they're so lagging or so premature, the RSI is too bloody early, the MACD is too bloody late, okay, absolutely rubbish on both of them, okay. So what we had to do, because they're rubbish, let me say that again, James, it's rubbish. It's something from the 1970s. So what Bill said to me is instead look to see if it's flat to rising, because that gets you in early on the MACD, which is important, and late after one full cycle on the premature ones like the RSI. So we looked at multiple indicators. That's not enough. People think, oh, that's enough. Thanks a lot. I'll go now. Alpesh. No, that will keep you poor. Okay, multiple indicators, not the way the textbook do so. Well, multiple indicators, flat to rising across multiple time frames. Not just the time frame you're trading. Which time frame should you look at? Which instruments? How do you find the right trades? I'll come to that in a second. Okay, across multiple time frames. And we needed price confirmation. Did the price make a 2-period high? So when I talk about, for instance, okay, when I talk about, for instance, what can I show you? I can show you something which is really interesting at the moment. Let's talk about sterling, okay, because that's in the news a lot, okay? So this is sterling US dollar. Each bar is 30 minutes, which means that you get a signal on the 28th, you get a signal on the 29th. You get about one signal a day. All right, now you might miss some because you're sleeping. Fine, doesn't matter. You don't have to keep placing trades in one thing because you're going to have an array of opportunities. How many, which ones, what time frames, how do you pick them? I'll come to that in 1 second. But my point is that there, whenever you see a green arrow in this webinar, it means buy, which means multiple indicators, multiple time frames, flat to rising, multiple indicators, multiple time frames, flat to rising, price confirmation, and pattern recognition. Pattern recognition, you don't need to worry about. You're not going to use it. We use Microsoft Azure to give us a library of patterns, okay, which have a higher probability, but they're not enough. It's not enough. It's not enough. I wish it was. I wish the magic bullet was. Oh, we've got a great library of artificial intelligence patterns, and that gives us the. It's not enough, I'm afraid. It's all about probabilities, and the probabilities are never high enough that we can rely on just one thing. It's like corroborative evidence. Who killed the cook in the living room? Well, we need to look at the fingerprints, we need to look at the footprints, we need to look at the DNA sample, we need to look at the video, we need to look at every other thing. So one thing alone will not convict a trade and make it a high probability trade. So what are they? Multiple indicators, and it's not just these, it's not just that. Don't be confused by that. For now, just ignore that, okay? Just ignore that. Just gives you the temperature of a trade. That's all it does. It gives me a temperature of a trade. Okay, multiple indicators, multiple time frames, flat to rising, price confirmation. Now, we have 10 algorithms in our hedge fund, 10 different algorithms. This is my oldest one. Okay, oldest one. But that's not enough. I haven't given you enough of the rules. You'll blow yourself up. It's like I've given you a Ferrari and you're going to go drive on the motorway. Well, guess what? In an hour, you're going to be dead. So you better just listen up to the other rules. Don't, at this point, people start going, oh, I'm off now. James, the time frame is irrelevant because it's the indicator which is more important. If you move the time frames around, say on the MACD, and a couple of you asked this, all that'll happen is you'll just be moving the window of how many signals are right. They'll still be the same number. It'll be just at different times. It doesn't matter. It doesn't matter. Just go with the default that comes with the retail the retail software. Okay, honestly, we tried 14-day, 12 period, 14 period, 25 period moving average on those. So the difference between the 14 and the 12, or the difference in the 18 and we tried every single computer out, and you know what? It made no freaking difference at all. Your odds were still pretty much identical. It's just your entries and exits changed a little bit. Well, what the hell does it matter if the odds are still the same? Okay, so you've only got two decisions to make: when to buy, when to sell. If you've only got, when to buy and when to sell, I will answer that in the end. When to buy and when to sell. How come 70% of private investors lose money? Let me say that again. 70% of you guys. I've been writing these freaking books and columns for 20 years, and 70% of private investors are losing money. Why? Well, they obviously haven't read my books. That's the first reason why. Okay, that's the first reason why. And they haven't been on my webinars, because if they had, 70% would not be bloody losing money. 70% lose money. So what we did in 2015 is we asked a couple of brokers to give us anonymized data to see if we could find why their winning clients were winning. Were there certain products? And we had an ulterior motive. We actually wanted to see see if there's an edge that we're missing on anything. Okay. Were they trading certain times of the day, certain products? Were people going long making more money than going short? Were men making more money than women? If they were holding things beyond a certain period, were they more likely to make a loss than a win? I mean, that's great data. We live in an age of big data. I mean, wouldn't you? I mean, it's an obvious bloody thing to do. Barclays published all that research as well. They did a book launch rather, and for my publication of the book. In that, I'm going to give you all that information. Don't go looking for it. I'll give it to you. Okay. And what we essentially found, I'll share with you in the next two slides. Right. Why are 70% losing money if they've only got to make a 50-50 decision, which is when to buy and sell? That doesn't even make sense, does it? Okay. So let me simplify it for you. What was happening? There was human error, obviously coming in, or constantly human psychology came in. Right, buy when multiple indicators show momentum upwards is likely. Multiple indicators flat to rising. They show this on longer time frames too, so multiple time frames, so you know more money to push the market out. Price confirmation, pattern recognition, don't you guys worry about it. It's what we do. Trade selection is key. Now, this is important, and this is the bit people often forget. Trade selections and more. What the hell do I mean by trade selection? Listen, if I give you a new car and I say to you, hey, go drive it, would you rather drive it on a smooth country road where it's going to be easier for you, or up a bloody mountain? Which of those two would you prefer? The trading equivalent is when you instantly, like I said, we're short the Dow, and I don't know why it's falling, but anyway, it is. It might be off no bloody reason at all. But let's just look at the Dow again. Okay, that is a smoother, now look, that is a smoother move. It's a smoothly trending. It doesn't always do that. There'll be times when it's just spike. If it's cycle, we're going to stay well away. So what do we find tend to be smoother and tend to be more rough? I will share the data with you on our data set. So trade selection is important. Okay. Trade selection. Terry, ignore pattern recognition. We're not doing it. I just said, you're not going to do it. Don't do pattern recognition. You're not going to do it unless you've got artificial intelligence. Access to Azure or whatever else. We're not going to do pattern recognition, okay, because for humans it's too difficult, right? Trade selection is going to be key. Smoother moves. Which ones tend to move more smoothly, okay? And I'll share that with you. And I haven't put it on here, but as you will know, the DAX tends to be a great one. I said, look, the DAX tends to be a great one. I'm talking about smoothness. I'm talking about, you know, steady, not going up 1 second, down the next, up next in spiky moves. Now, but I'll tell you which ones in a second, because for you guys to judge that, it's going to take 20 years of experience. So I'll shorthand that for you based on our research. So write this down, write this down. If there's nothing else you write down, just take a picture of this if you wish, okay? Because it's everything on one screen. Write it down. SELMA is what it's all about, which is stands for stops. Okay, stop. Whoops. Let me just move my fat ass away out of there. There we go. Stops. So we're going to talk stop losses, entries, limit or take profit orders, right? Money management, how much money we put in a trade, trading psychology or mind. How do we avoid? That's the reason why 70% lose money, even though they've only got two decisions to make. It's trading psychology. So I'll show you the process. Once you've got a process, you remove psychology. The whole point of any process is to remove the human element, which is the behavioral element, which messes everything up. And adding to winners. Now, I want you to write this down.
Winners add to winners. The most profitable traders will add to their winning trades. But how do they know when? I will explain that. How can they not be screen slaves and still know when? I'll explain that in 1 second. Okay, that's going to be important. And I don't want any of you spending more than 15 minutes in a day in front of the screen or 1 hour a week. And the reason is otherwise you will, and our experiments prove it, you will do low quality trades out of boredom and you will blow yourself up. Okay, so my job, and the reason my very first best-selling book, Vladislav, I assume you're Russian. Is that Russian? And does that say, oh, that says Internet Trading Course. Anyway, the reason my very first book was called Mind of a Trader, there you go, Mind of a Trader, is because it was about trading psychology. It was the most bloody important topic, is mind. Okay, that's why. So I'm going to give you a process to remove yourself out of the equation as much as possible. Now, here's one other way you're going to avoid being poor and get to being rich. Other than winners add to winners, and that's a critical difference between, Sharon, you're kidding me, right? You said, what, Selma? Stop losses, entries, limit, money management, mind, adding to winners. A for adding to winners. Slovakia, beautiful country. Apologies. Right, losers add to losers. The reason 70% of private investors lose money, our research proved, and we knew this beforehand, so we had a hypothesis we tested with actual empirical evidence, was this. The losing traders at the brokers, on the whole, tended, unlike the winning, to add to their losing trades. When they had a loss, they tended to add to that position. They doubled down on it. Instead of placing a trade, setting how it's going to exit and walking away, and I'll tell you how to exit in a second. What they did is they'd look at it, they'd be on their phone and they'd go, I'll add to that because I don't want to be wrong. I don't want to be wrong, so I'll just add to it. I'll average down, they'd tell themselves. You don't know what that is, good, right? They'd average down. Losers add to. These were the two main things which differentiated the rich and powerful in the hedge fund industry and private investors and the poor. So we need to know when to add to our winners and where the hell are our losses, we take them. So we need to know when to enter and when to enter more and when to get the hell out of there, and a process to make sure we're not spending more than 15 minutes a day or an hour a week. Okay, thank you, Irina. Okay, so how do we do that? So the first thing we need to know is the E in Selma is this, okay? And I'm gonna come to VSL and VPS as well. Again, how much money we put into a trade, 1 second, wait. All right. So the reason I want to show you this chart is because it is the best depiction of trading in the real bloody world. It happens to be euro dollar. It doesn't matter if you don't like Forex. It could have been Dow. It could have been DAX, my most favorite instrument in the world to trade, okay, which is the German index. Could have been Google. All right. It could have been any of those. It could be any of those. The point is, the reason this is so important and tells you everything on this slide you need to know about trade. Oh, take a picture, print this thing out. It's that good. Is this losing trade, losing trade, losing trade? Not me, George bloody Soros. Okay, right? Any losing trades will be small in size, short in duration. Any decent strategy, if your losses are not small in size, short in duration, write that down. S&S. Small in size, short in duration, it is a rubbish strategy, okay? S plus S. If you don't have S plus S, okay, then it means you've got a shit strategy. Equals SS, right? Small in size, short in duration. 3 losing trades? Oh, well, that's rubbish, isn't it, Alpesh? No, because this is what trading's about. It is trying to get those big ones. So you might say, well, wait a minute, how come you don't only have these? Well, none of the world's best hedge funds, none of the best traders, none of the people who I've ever met and interviewed for any of this, none of the ones who've written their own books like George Soros, or people who've had books written about them like Jim Simons, probably the greatest trader in the world of Renaissance technologies. None of them can only get big winning trades. If they did, all the money in the world would have been soaked up, but it's just not possible. Why? Well, think of it like this in logical terms, and not just the Winton slide that I showed you earlier. Think of it like this. If you could see into the future, you would have only those. Sadly, we don't gamble, we can't see into the future, but let's say we bought into something like here. What if Donald Trump did a tweet and then it collapsed? I can't see into the future and control him, so we're bound to get losing trades. So how do we make sure we make more money when we win than we lose when we lose? The reason is we never had to losing positions, we had to win. So how do we know when to do that? Well, we need to know out of Selma our entry, which I'll come to. Well, I've already said multiple indicators, multiple time frames, flat to rising. Price confirmation, I've already gone through entry. I've done that, okay, in the webinar. I've given you the entry rules, but I haven't given you these other rules. So let me give you those now. I've given you the entry rules, multiple indicators, flat to rising, multiple time frames, price confirmation, 2-period high. I've given that. So let me give you the stop loss, because the entry alone, people think, oh, that's all I need to know. Okay. Adam, were you late? Adam said, why does the book you just showed in Chinese or Japanese? It's been all my books have been translated into 7 different languages. So I was showing you the you must have turned up late, my friend. Okay, that's the translation of my book, Mind of a Trader. This is the English version of my book, Trading Online. 18 books, 7 different language translations, because guess what? The rest of the, this is my point. The whole world wants to learn how to trade. That's the reason I was making the point. The whole world wants to learn how to trade, which is why the Financial Times gets to sell it into Russian and Korean and French and German and all the rest of it. That's my point. The point isn't, oh, well done, Alpesh, I don't need pats on the back. The point is the whole world wants to trade, but they're doing it wrong because they're not doing, I mean, this slide is, it's actually just distilled and stolen from what hedge funds do right and what we saw and published. And the reason we, by the way, if you're wondering, why would you publish it? Why wouldn't you keep it a secret? If you don't publish it, nobody would ever believe you, okay? Because they'd say, well, how do I know you met the world's leading trader? How do you know you met Bill Lipschutz or David Kyte or John Najarin? And they said this because once it's in print in the FD budget, you go, oh yeah, that's research that's been published, okay? So let's get this bit right. We need the stop loss. So how do we pick a stop loss there? Remember, we're never going to add to a stop loss. If we're going to stop, we're not going to. But the key is we don't want it too close. We don't want it too far. Now, every single successful, profitable fund we saw and profitable private investor we saw, some of them, they might have done it by accident. They might not even realize they're doing it right. And we found that when we interviewed some of the private investors. They didn't actually know. They were just natural. Yeah, it's like giving a tennis racket to my son and he keeps it hitting over the net. Is it because he got trained by the best? No, it's because the bloody kids are natural. What can I do? Now, only 1% are naturals. Okay, so what did they do? It is this, and it was fascinating because these guys are making billions. Can you imagine? They're making billions and you can see it on screen what the hell they're doing and x-ray it. So you can see why I get excited about trading and it's my life passion. So what they did with their stop losses is this. They had a very simple rule in common, virtually all of them, which is volatility-based stop loss, right? And I want you to do the same. In other words, if the markets were more volatile, their stop loss was further away. Now, if you think about it, that's bloody obvious. I mean, it's not genius. It's just obvious. If the market's more volatile, of course your stop loss is further. But talk specifics, Alpesh. Tell me specifics. I'll give you specifics. What they did is, see that? That's how much it's moving in any given period. Now, I'm going to tell you which time periods to focus on. If you can't wait, 15 minutes, 30 minutes, 1 hour. Why? Even if you've got a day job, I'll explain why in a second. Okay, so if it's more volatile, right? Let's say on average, it moved up each period, up and down. The range was 10 points. They would put it 20 to 30 points away. How much exactly, Alpesh? How much exactly? 2.5 to 3 times away. Why not 5 times away, Alpesh? Why not 1 time away? Well, 1 time away, you've got stopped by noise. 1.5 is too close. 2 is still a bit too close. 3 is probably a bit too far. That's it. They didn't say to me, oh, Alpesh, because we did artificial intelligence big data analysis across 50 trillion data points, and we worked out the correct figure is put it 2.756789 multiplied by pi divided by 3.141. No, they didn't. I thought they would, but they didn't. What can I tell you? If they didn't, they didn't. What they said is put it about 2.5 to 3 times away. They were so focused on the practical, which is, listen, Alpesh, we're not academics. We just want to make money. We don't give a shit whether the correct number is 2.5 or 3 times away. So more volatile the market's further away, the stop loss. But the cleverer ones with you, amongst you, will say, wait a minute, if it's further away, because the market's more volatile, doesn't that mean, first of all, that it's attuned to every different market condition? So there's not this. So get this, and this is brilliant. Get this. the rule isn't the same for all markets because it's conditioned on the volatility. Genius. I think that's freaking genius because you can't have one rule for all markets, right? So what they did then is this. If it's further away, they just reduce the position size. In other words, volatility-based position size. So let's say it was twice as far away, the position size would be half as much. So they only risk losing the same amount of money no matter what the volatility conditions. Imagine going sailing. No matter how dangerous the conditions, your risk is still the same. If it's calm waters, the risk is the same as if it's hugely ferocious waters. What are those numbers? Well, obviously in our computer system, we have it calculated for us. Okay, but if you want to know how to calculate it yourself, right, I'll give you the business plan so you work out the maths of how much you should be losing of your capital. I've already told you how much capital to put in a second, all right? But I'll tell you, we'll work out the capital, how much money in 1 second, okay? Which is the second M, money. Now, once you've got, and this is really important, this is probably, like I said, this is the webinar, this is the important part of the webinar. Once you've got that stop loss, the distance from the entry to the stop, you know. So you tell your broker in the morning, you go on your phone, you go, right, entry now, stop loss here. That's it, right? Go to work, go about your business. But you then also tell them, and if the price hits here, right, which is exactly the same distance from the entry upwards, so you've got some profits in your pocket, then you say, I want you to do the same trade again, whatever that trade is. It was buying £1,000 worth of Microsoft or a pound a point of Microsoft or whatever it was, CFD, spread bets, futures, doesn't matter. It's all translated into money, and we'll come to money in the business plan in a second. Just buy the same one and put it stop loss here. Now you can do that on a broker. If you don't know how, the broker will bloody tell you. They'll be happy to tell you. Okay, entry here, stop loss here. Simple as that. Buy a new buy. If the price hits this, buy more and put it stop loss there. If it never hits there, it doesn't. Why are they risking capital and opening up another trade? Why didn't they just take the profit here? Why didn't they set a profit target there? Because winners add to winners. The most successful hedge funds, the most successful private investors added to their winning trades. Now you might say, Alpesh, that's too much to take in. So let's look at this then. This is pretty much the same depicted on a different chart, okay? Same thing depending on, if you are a beginner, I want you to do this. Have a fixed stop and a fixed take profit, okay? Which is C would be your fixed take profit or limit order, the L in Selma, C, and a fixed stop loss. Simple, right? Why? Because you're a beginner. I'm keeping it simple for you. Won't make you super rich. Yeah, it just gets you trained up. It's like riding a bicycle with training wheels, okay? If you're intermediate, you get a bit more competition. Competence. You get to follow, you look at more instruments. You spent a bit more time. You spent, maybe I'd say intermediate would be about a month, after about a month, okay, of learning, right? Roughly. For some people, it would be more. For others, it would be less, okay? Just have a trailing stopped loss stepped. What does that mean? Trailing stepped means this. As this price goes up, this stop loss goes stepped up. Why is that important? Because it's a great, the kid has written, thank you very much. I'm going to post that, kid. I'm going to post that. Thank you very much. Thank you very much. Oh, how do I broadcast that? Oh, God. There we go. Comment. I'm going to broadcast that. The reason why, and this is based on, guys, this is lifetimes worth of bloody research. I had to meet those leading traders first. They were in New York and Chicago. I had to get a book deal with the FT just so I could get access to those traders because they weren't going to meet me just because I was nice and good looking, okay? Certainly not the last one, right? They were going to meet me because I had an FT book deal. I was a student, right? So this is a lifetime's worth of work. So if I bang on about a bit, forgive me, okay? Because it's sweat, blood, and tears that has gone into this. And this stuff doesn't write itself, all right? This kind of research, I feel like a professor of trading. So I'm giving you this because nobody else gives you any of this. Why? Because, well, they do in my book, but, anyway. So if you're intermediate, you don't have a profit cap. Why would you have a cap profits, right? You just have a trailing stop loss. So if the price goes up, then the trailing stop loss will take you out. You'll be at work or whatever, you'll be drinking tea, and your broker will take you out because it's a trailing stop loss. That's intermediate. The advanced is the level I want to get you to. You can't be a black belt in karate on day one, okay? Advanced is what I want to get you to. That'll probably be maybe after 3 months. Oh, why 3 months? Why 12 weeks? It's a good number, I've found. Some people, it's quicker. They're like at it like this, but that's about 10% of people. Yeah, just like at school, some swap will be getting everything on day one and others it takes longer, okay? Advanced, you'll have a trailing stop loss, and you'll add, I've missed it out there, you'll add to your winners. You'll add to your winners, okay? Which is there. So, and by the way, it doesn't take more than 15 minutes because what you're doing is you're scanning the charts, you're placing one trade, entry, trailing stop loss, and if the price goes to point C, Mr. Broker, buy me some more and put it stop loss at point A and make them all trailing. That's it, and then you walk away. Simple. Now go and do something else. Why do I not want you in front of the screen all day long? A, you've got better things to do. B, you're not a geek like I am. C, this is not your life's passion, all right? D, the longer you're in front of the screen, the more low quality trades you're going to do. We actually did an experiment on this and we proved it. Now, why does this all work? I'm going to appeal to your logic for a second, my friends. I'm going to appeal to your logic. And by the way, when it comes to returns, Bill Lipschutz said private investors from trading should be generating 100% per annum. I didn't say it. He did, because he said as private investors, you don't have the same restrictions that big hedge funds do, or like he does, as when he was at the time when I met him, global head of foreign exchange trading at Salomon Brothers. You don't have those restrictions. And because you don't have those restrictions, okay, you can, I'll show you the business plan, why you should be looking to get that kind of a return. Now, when you've got a fund like ours, you can't have those returns because the regulator will put restrictions on you. The investors will put restrictions on you. All right. Anyway, don't worry about all of that. That's not your problem. Why does this? Well, I've written How to Get Rich Trading because it's tongue in cheek. It's tongue in cheek because that's what Bill said to me. He says, I know why you're meeting me, because you want to be rich. Well, think about it. If you're sitting in front of the world's leading trader, not just him, but also Bernard Oppetit, okay, John Najarian, David Kyte, guess what's going to happen? Guess what's going to happen? Hell yes, I wanted to know how to get rich, right? Yeah, because I was from Blooming Armley in Leeds. So this was a world which was supposed to be close to me, and anything that's close to me, well, I want in, right? So why does that hold as a strategy work? Well, because the markets can only do one of four things. It can only do that. If it's going up and then up, a private investor just sits there and goes, yay, oh, look at me, I'm so good. Well, 25% of the time, it's going to bloody do that out of chance alone. But they're going to mistake chance for skill. What does a professional do? A professional doubles up at this point, adds to his winners. Why does he add to his winners? He'll either skyscraper or pyramid, where he'll add half if he's pyramiding. Skyscraper means adding the same size. He never does an inverse pyramid, which is doubling his risk once it's risen. Okay. No, Adrian. On the whole, Adrian's asked a brilliant question. Will you add to winners more than once? Only if you're, I mean, max we do it is twice, but honestly, you're going to do that after about a year. Okay, don't do it any sooner than a year. All right, how much does the step increase with each step? The amount from the stop loss to the entry is the step size. From the stop loss to the entry is the step size. Why is steps better than dynamic, which does it point for point? Because it's a balance. It's a trade-off between giving a trade enough room and giving it enough room to trade and giving it so much room that you could have big losses. Okay, so here a professional wins because he's added to his winners, right? So on the 25% of the occasions when he just gets big stonking winning trades, guess what? He's laughing because he's added to his winners. So he's made more than the private investor. What about if it does this? Well, guess what? A private investor, when it does this, guess what the private investor does? Okay, he just stays on and he waits. Well, his strategy should have been to get out because his stop loss has been it, but he doesn't, right? It went up, it went down, so he just waits. So he's in no man's land. And the chances are, if he's in no man's land, he's going to get that happen sooner or later and get a really big loss. So the professional gets out, the private investor stays in. The private investor sooner or later is going to get big losses. So the professional's doing better. What about if it does this? Well, the professional has got out here. Why? Because he's afraid of this. This is what I'm trying to avoid at all costs. You as private investors aren't. The 70% of losing traders we found weren't afraid of this enough. They did not have enough fear of this. That was the biggest problem. So here I get out and it goes back up and the private investor's like, oh, I was right not to get out. So it's okay. See, I should never get out. I should always add to my losing positions because look, sometimes they go up. Yeah, guess what? When they do that, they hit this sooner or later and they mess up. So I take a small loss. They end up taking a bigger loss. I, as a professional, have done better. And when it goes down and down, I, as a professional, get out quicker. my stop loss, guess what they do? They often double down or just wait. So they get a lot of these. So I've done better than them then. The reason and the big difference in these 4 trades between a professional and a private investor is this. A private investor ends up in this lane. We never do. That's the only key difference. And when they're in this lane, guess what? They don't double on their position. They don't risk their profits to make more. Not risking their capital, risking their profits to make more. We do. And when they're in this lane, they end up getting into this lane. And when they're in this lane, they end up getting into this lane. So the difference between us is whenever in the down lane, okay, and the private investor finds ways of getting into the down lane. Either they're in it or they move into it. Now, that's the game theory type of way of doing it, okay? Raj, they are, but like I said, don't buy the book. I'm giving you everything you need in this webinar. Most people will buy the books thinking, oh, all of this is in the book. They won't read it. It's freaking 400 pages. It's in the webinar. You're better off. I wrote the books at a time when webinars didn't exist. Okay, so webinars are a far better way of getting information across than reading. I'm sorry to say as an author. Okay, so just watch this webinar and you'll be better off. Now, the reason people do this, I do not know this broker. I do not recommend this broker. I do not endorse them. I do not know who they are. I got this off them, okay, as well on there. Now, Amin's asked a brilliant question. Why are the markets falling? I don't care. Trend following hedge fund managers don't care. The moment you try to gamble on news and try and step in front of it, you're going to need a crystal ball. None of the traders I showed you, none of the ones in my book gamble on news or give a shit why the markets are falling or rising. In fact, David Kyte said he decides, and he's in the rich list. Google him. David Kyte said, Kyte with a Y, said in my book, he said the way they decided, and this is not PG-13. This is going to be adult, what I'm going to tell you. So you've got kids in the room, turn off the volume. He said, and it's printed in my book, he said the way we decide whether the market's going to rise or fall is, he goes, we're a bunch of sun reading traders. We look on page 3 and we look to see which direction you know what is pointing on page 3 of the sun. I interviewed him when page 3 still had that. Okay, I kid you not. You want to know why it's male dominated? Well, because that's the kind of men you had. I mean, you know, I respect him for other things, but not for that. And that's how they decided. I was shocked, not at the sexualization of women. I was shocked. He really didn't care about the news. They followed where the money was going. Literally, what he told me, and it's printed in the FT book, is he said, we see if the Goldman Sachs guy's buying and we follow on the back of his order. We ride his coattails. He said, I don't give a shit what's happening in the news, and neither do they, or whatever. We're following their order flow. I've never cared about the news ever since. I've never cared, okay? I've never cared. Now, if you're wondering then, okay, Mr. Patel, why do you appear on BBC News so often then? Because when I give my market opinion, guys, what I am using when I give that market flipping opinion, right, when the Dow's down 800 points and Nasdaq's at 242, is this strategy. I go look at my freaking computer screens and I do it. And I say to them, well, it's falling because we've got a lot of bloody sell orders. Okay, some idiots triggered it. Might be fat fingers. Who knows why they've triggered it, right? So when the Dow right now is falling, that is multiple indicators, multiple time frames, flat to falling. Now, I'm going to show you, if you want, how to automate this. If you want to automate it, I'll show you how to do it. I've given you the manual rules. I know why you're all here, because you see these figures. Yes, their top trader did $1 million. Guess what we found from anonymized broker data? The ones who were winning were never adding to losers and were adding to their winning positions. Okay, so what else were they doing? Now, before I go into all the other bits of what they were doing, oops, let me just turn that off. Okay, is this. Beware of these things on the internet, okay? Dimpy, you can't. I guess you're really looking at the same thing. You know, the chart, really, and the trend. That's it. There isn't another source other than the market data. We're just looking at the market. Dimpy's asked a great question. How can you find out what others are buying and selling? The simplest way, I mean, there are some quite complicated level 2 indicators. I've never seen that work. But let's take this. Literally what you're looking at one way or another is that. That's where you're getting your data. And from that, you're divining or discerning the trends. It's all the data that the hedge funds look at. They're looking at those price moves. Now, other things to be aware of on the internet, really quickly, let me go through this and I'll show you how to download this if you wish. Okay, footballers and teenagers on TikTok with some secret formula. Bullshit. Okay, if they had it, they'd go work for 10 million a year at Salomons instead, or set up their own hedge fund. Obviously, they're not going to go on TikTok and tell you their secret formula. People talking about being right. Oh, look how wrong! Look how often I was right. No, it's about how much you make when you're right and how much you lose when you lose. People trying to get you to trade £1 a point. Too much. Okay, they're trying to get you to do that because they've got a deal with a broker where the sooner you do it, the more money you'll lose. When you're starting out, when you trade the smallest possible size, 20 cents a point. I know you're thinking, hey, Alpesh, I'm so rich, I can do £10 a point, £30 a point. That's fine. Once you're consistently profitable, feel free. People trying to get you to use their brokers. If they're not broker independent, they're scamming you. They're getting kickbacks from the broker. Okay, they've got a conflict of interest and it's massive. So don't do it if they say only use these brokers. People trying to get you to take out subscriptions. Why do they need to take out subscriptions? If they're good, right, why is it not lifetime access and free upgrades and one-to-one tuition? Why subscriptions? Okay, all the data I'm showing you, this is freely available. Live and real-time price data from many, many brokers. Why? Because the brokers want you to trade with them, so they give you that data for free. So nick their data for free, nick their charting for free instead. Okay, people trying to upsell you, oh, but you're not profitable. Oh, you know what you should do? You should buy this, and then you should buy this, and then you should buy this. Forget it. People claiming to have worked at a bank, right? There's so many idiots like, oh yeah, I worked at Citibank once. Yeah, probably as a cleaner. Anyone showing off their homes or holidays or helicopters, straight away. Okay, Warren Buffett still lives in the same tiny home he lived in 1963. Really, who gives a shit? Holidays, if you can go on one. EasyJet, £70, you can end up anywhere in Europe where it's hot and sunny. And helicopters, please, seriously, anyone who is not the CEO. If somebody who's not the CEO of a company is trying to tell, like, look, Steve Jobs promoted this. Okay, when he launched something, it's him, right? And don't trust any brokers out of Cyprus. Don't trust any brokers, but don't trust them out of Cyprus, okay, at all. We're going to keep it simple. We're going to keep it simple, all right? Else it won't get done. What we're keeping simple is this. It's either a buy or a sell. It's simple, right? These are the magic numbers. Scan the markets 15 minutes a day. Which instruments? I'll tell you in the next slide. 12 to 20 instruments. Why 12 to 20? Well, because if you only look at one thing, you might not get the trend, as somebody said earlier. Adam, I think it said, markets don't trend all the time. Exactly. They only trend 20% of the time. So you need to look at different markets. Okay. One screen. Anybody who shows you multiple screens, idiots. One trade per day, 20 trades per month. Right? Why one a day? I'll show you in the business plan why that'll give you ample capital. Okay. Spencer, just email me and we'll send you the details. Major versus minor currencies or minor versus minor currencies. Indices, especially the DAX, I love. Equities, if they're smooth on the whole. I'll come through some of those in a second. Minor versus minor, example, Australian dollar, New Zealand dollar. Indices, I told you already. Equities, these are the major ones. Minor is all else, okay? Try to avoid major versus major currencies, because if you do those, they tend to have a lot of money being thrown at them and there's a lot of volatility and you never get the smoothness of the trend. Okay, that is not to say you mustn't do it because, well, you know, great. You know, well, let me show you as an example. All right. Pain in the arse, sterling US dollar. Bill Lipschutz, global head of foreign exchange, Salmon Brothers, said he never made money trading cable, i.e. sterling US dollar. Okay. Downward sell. Okay. This one made nothing. That one made a little. That one's making a little right now. We're over here. Great. Fantastic. That was a lot of hard work, wasn't it, for 2 days? You know, it's going to be easier on certain indices like the Dow. Not always, but certainly if they're moving in a smoother pattern. It's not violent. Now, which ones? Well, I'm telling you now which ones I prefer. The DAX for sure, which I've not even shown on there because I'm telling you, all right? Times of the day, well, I don't have strong evidence on this, but these can be quite good times, right? But you can do it 24/7. The market isn't 9 to 5. It's 24 hours a day, 7 days a week. Time frames, I'm going to prove to you in a second why. If you've got a day job, the 15-minute, 30-minute, and 1 hour time frames are the best. I'm going to prove to you. Now, right? Rule 3, it is about making money, not about being right all the time. Do not take my word for it. This guy, George Soros, look, all I'm telling you is what I know and have learned elsewhere. Anyway, it's not whether you're right or wrong, but how much money you make when you're right and how much you lose when you're wrong. He said it, right? Bill Lipschutz, my mentor, advisor, one of my 10 mentors, advisors in trading, the world's best hedge fund manager 2 years ago. If you are waiting to be right 80% of the time, you will never make it as a trader. How much capital? Listen, this is the percentage of profitable traders grouped by average trading equity. Okay, winning percentage, right, by equity. Those who had under $1,000, only 21% of them were profitable. You've got a 50-50 chance of being profitable, 43%. Basically, call it 50-50 if you've got more than $10,000. I'm not encouraging you to start a broker, enter a brokerage. I have no affiliation with any brokerage. Open a brokerage account with $10,000. Why? Because you're starting out. I want you to start with a demo account, and I want you to start with $1,000. But Alpesh, we'd only be right. We'll only be profitable on a 21% probability. No, you won't. The reason that's 21% for everyone else is because what this is effectively saying is people with less capital were trading too large a size and got wiped out. They were doing a pound a bloody point, okay? Whereas a pound a point on $1,000 account will get you wiped out very quickly and you won't be profitable. A pound a point on a $10,000 account won't. So, Alpesh, that means you've got to have $10,000. No, it means you've got to have a $1,000 account with 7 pence a point. And I'll tell you which brokers, there's many who will allow you to do it. I think, Alan, they're okay. It's one, I think they're all right. I'll tell you where I've got my list of brokers. I've made a list of FCA regulated UK brokers. They're all ones you've heard of. But I'll do that in the Q&A. They should be all right. So don't do a pound a point, okay? Do 7 pence a point, 8 pence a point on $1,000 instead, or a demo account ideally, until you're consistently profitable, and only ever will risk capital because 70% otherwise lose money. See, 70% lose money. Guess what? Most people start with that, and the brokers love it because the brokers are like a casino. They're on the other side of the bet. They're not matching buyers and sellers like estate agents. They're like casinos because they realized most people are going to trade too large. They're going to put their stop losses too close, or add to their losing trades. They're going to blow up. They're never going to the winners. They're going to mess it up. Yes, the markets don't trend all the time. Right, that's why we're going to look at multiple instruments, so that when we scan the markets for 15 minutes a day, I've only shown you, what's that, 8. You should have double that number on the screen, but for simplicity's sake, for tonight, I've only shown you 8 on here, okay? So the screen isn't overcrowded. Scan for 15 minutes, find one trade a day where the signal, multiple indicators, multiple time frames, flat to rising, okay? Now I've been told, could I trust AU? You mean Australian? Regulated broker? I don't know who Blueberry are. I don't know who they are. Australia's not a bad regulator, actually. They're probably harder than the UK one, so you should be okay. But if you've got a UK FCA regulated one, why are you doing an Australian one? You know, okay. Now, remember, we're just riding the moves of others. Now, can I, in the last 10 minutes, and we're not there yet, but we're going to get there in a minute. I'm going to show you the business plan next. Business plan is absolutely essential because it wraps everything together without which you can't understand. The last 10 minutes, can I show you some technology my hedge fund is planning to float on the stock market? We're going to get venture capital investment. You've heard me say this before. If you know about it, you know what my plans are. They're in the public domain. I've met up with Amazon Ventures, Google Ventures, SoftBank, and the London Stock Exchange. We want to float this on the stock market. But it's in the last 10 minutes I'll tell you about. You don't have to stay to the last 10 minutes if not. Okay, Raj, I'll answer that in 1 second. Yeah, Raj, you should ignore them. Think about it. Are they running a hedge fund? No, why not? Suspicious. So ignore it, okay? Right, business plan. There's my mum, always makes a visit on all my webinars. I do not know why Prince Charles is bowing down to me. Business plan. Is it all worth it? This is the most important thing you need to know. There is no point getting into trading. If it's not going to be worth your while, go do something else. Go spend time with your spouse instead. So Bill said to me, before I got into this whole trading journey, and think about it, I left being a career as a barrister to do this. So you can imagine, hey, you must really love this. Maz, yes, they trade again. Well, they take the other side of the deal. I'll explain that in a second, how traders work. They take the other side of the deal. It's not they're trading against you. They can't move the market. They get a price feed, okay? And they've got to take that price feed. They can, but the way they trade against you is they're taking the other side of the deal. All right, and I'll explain in a second how they trade against you. Just give me a second. We'll talk about it in the brokerage section, how they rip you off and how to avoid that, okay? I will give you favorites in FX and equity as well, Raj. Well, Forex is minor versus minor or major versus minor. It's as simple as that. I love sterling Australian dollar. I love Australian dollar New Zealand dollar. And I love Australian dollar Canadian dollar. I love the DAX. When it comes to stocks, it varies a lot. Okay, I do tend to like the tech stocks often. Okay, oftentimes because they do tend to trend quite a bit. The crazy mofos that they are. Okay, they do tend to trend quite a bit, and I'll give you an example. I wouldn't do 5 minutes, but here's Google as an example, as an extreme example. Okay, they do tend when they move that, okay, so I'll give you a whole bunch of those, but I'll come back to all of that in a second. How much money can you make? That's the most important thing to decide this for you. Then I'll show you how to download it if you want to automate it. You don't have to if you wanted to. Otherwise, I've given you the manual rules for entry, stop losses. But now I'm going to give you the money management rules and the business plan. So because this is the most important part of the webinar, okay? Now, trading, Bill Lipschutz said to me, it's a bit like driving a car. Okay, when you first do it, it looks too complicated. Stop losses, entries, limit orders, steering wheel, accelerator, brake, indicators, rear view mirror, too complicated, okay? But we all master it, don't we? Trading's the same. It is a skill which looks too complicated. Look, we'd all love to have a driver instead of doing it ourselves. But the reality is it's a skill worth mastering. Why? So this is what we did. We put a business plan together for me, and this is the same business plan for you guys I'm going to suggest, all right? It's the same business plan for you. Maximum loss, 1% of your total capital. So let's set aside some business plan competition. Now I want you to pretend you are now a business person. You are a small business entrepreneur with a side gig which doesn't require an office. It doesn't require anything else, okay? It doesn't require whatever else, warehouse, staff costs, nothing, all right? And because it doesn't require any of those things, what I want you to do is instead, imagine how much capital you're eventually going to have invested in the business. Not today, but eventually. So eventually, let's say you're going to have 20,000 in the business. Okay. Maximum loss per trade. Maximum loss per trade is going to be, and this platform, by the way, people say to me, where do I get the trades from? These platforms are available from every broker. Every major UK broker has this for free. They give you this data for free. It's MT4. Okay. The signals are mine, based on my strategy, which I've already told you. That's separate. If you want to download that, that's, I'll tell you how to do it, but you can do it manually. You just download the MT4 platform. It's freely available from any broker. So it's broker independent. The data's there. Look, you can see the data. They all give it for free because they'll want you to trade through them, but you don't have to trade through them. You can trade through different brokers. It doesn't matter. My point is many brokers offer it. So I'm not even going to name any because virtually all of them in the UK offer it. Okay. All the data's live, real time, free forever in currencies and stocks. There you go. Goldman Sachs. There you go, Ferrari, Facebook, okay? That's not the point. We can come to the intricacies of that in a second. The reason we show it on this is because to show you it's ubiquitous, it's available. Stop paying for software. Stop paying subscriptions for software. Let me say that again. Stop paying for subscriptions for software, okay? Because it's freely available. Call me the money-saving expert. So 1% of 20,000 will be £200. Now, you're not going to do this on day one. This is when you're in 12 months, okay? Win-loss ratio, assume you're a bit better than a coin. Okay, with all this, multiple indicators, multiple time frames, what I'm showing you, the strategy that we use, let's say you're only a bit better than a coin. Okay, so instead of 50-50, which is a coin toss, you're 60-40. That's all. So nothing generous. Okay, so you win or profit 60 trades out of 100. Right? And you lose 40 out of 100. So Bill and I sat down, we did this, and he said to me, okay, let's do this. Average loss is therefore £200. Okay, average win is 300 because why? Winners add to winners. We're going to add to our winning trades. That's our whole strategy. We make more when we win than we lose. We lose. So just assume these figures for a second. They're over optimistic. We're going to really dial it down in a second, and you're going to see it's still worth it. Okay, so I said to Bill, okay, let's do 100 trades. Remember, Bill was global head of foreign exchange trading at Salomons. Okay, so 60 of those, £300 in profits, right? And we wrote this down when, this is 20 years ago. 60 times 300, profits of £18,000. Thankfully, inflation means the figures are still bloody realistic after 20 years. Inflation's been relatively low, is my point. Okay, so, and I said, Bill, this is amazing. This is more money I've ever seen in my life because I was a student at university, remember? This is great. I want to do this for a living. I want to sit behind a desk all my life, bang a keyboard and get free money coming into my bank account. And he said, hang on, you're going to have 40 losing trades. That's losses of £8,000. I said, yeah, but that's still net profit of £10,000 per 100 trades. £10,000 per 100 trades, I told him, on these figures. I said, this is amazing. I'm going to be a day trader. You can tell I got overexcited. I'm going to be a day trader because that was all the rage. The Independent newspaper did a whole article about me and day trading, all the rest of it. I said, I'm going to be a day trader. I'm going to do 100 trades every week. Why not? If you're getting money for just tapping the keyboard, it's the dream life for everybody. Solves all of life's problems. 50 weeks a year, 50,000 trades, sorry, 5,000 trades per annum at £10,000 per 100 trades works out at £500,000. And guess what? Don't be stupid. What you should be saying to me right now is, Alpesh, don't be daft. We're not going to do 90% of that, 2/3 of that, 3/4 of that. We're not even going to do a half of that. Alpesh, we're not going to do a third of that. We're not going to do a quarter of that. Alpesh, okay, we're not going to do a fifth or 15%. Let's say we did 10% of that, 50,000. It's way too much. What am I saying by way too much? Our goal is 500 to 1,000 per month, remember? I said 500, right at the start of the webinar, I said it's 500 to 1,000 a month because we're starting out in a new strategy, okay? 1,000 per month. So Bill said to me, you're not going to be a day trader, Alpesh. Don't give up the day job. Don't tell your parents you're going to leave the bar. Instead, keep your day job. Be a day jobber. I want you all to be day jobbers. None of you should be leaving your job at the end of this webinar. 100 trades per 6 months or 1 a day. 200 trades per annum. Okay, what does that work out? Well, at £10,000 per 100 trades, 200 trades per annum works out at £20,000 per annum. So not 10%, but 4% of our business plan. Okay, 4% of our business plan we're going to hit. Not 10%, we're going to hit, is it 4%? My maths is going crazy. Of our business plan. No, we're not. No, we're not. Because guess what? That's still almost double our 1,000 per month. So even if we did 4%, we're almost double. What we actually need to do is about 1.8% of our business plan. That's a business plan I don't mind having. No warehouse costs, no staff costs, no ongoing costs, no employment tribunals. Great. No office costs, no insurance costs, no human resources department, no warehouse, there's no logistics, there's no Kent border controls, there's no worries about World Trade Organization or Brexit or tariffs. Free or open market. This is the ultimate free market. This is the ultimate free market. Okay, we are short the Dow. The Dow's our most profitable trade this evening. Okay, the short Dow position there. Okay, from earlier on, it's now, we started around here, didn't we, on the webinar? It's now gone right down. That's that. Okay, we'll come back to some of those in a second. Right, but hang on. I asked him the same question you should all be asking me. Hang on, Alpesh, if this is true, why isn't everybody rich? Why isn't everybody rich then? And I asked Bill that. I said, hang on, Bill, if this is true, I was at university making a life-changing, life-altering decision. Should I give up the bar? Now, trust me, if you know anything about Indian families, you do not go to your parents and say, I'm not going to be a barrister. I'm going to be instead a trader. You don't do that. You do not do that. Okay. So I asked Bill, what are the key reasons for failure then? And he said the key reasons for failure are bad teachers, bad mentors, bad strategies. Strategy, I've told you the main key points I've given you. Selma. Okay, I've given you the strategy. So it can't be the strategy, and I'll recap it now. Okay, and I'll show you how to download the algorithm if you wish. You don't have to because I've given you the strategy. Anyway, 100 trades per 6 months, 200 trades per annum, £20,000 per annum. Wrong. I told you. It's 1K per month or 500 per month, ideally. Okay, and that's not guaranteed. Some months you make more, some months you make less. That's my mum again. Okay, and you iron it out. That picture is taken when we're going to a fundraiser for a charity of which I am co-chairman called the Lombard Trust, which I try and mention in all my webinars. It looks after widows and orphans. If you make money in your trading, which you should all do, I hope, after watching my webinar and learning and practicing the skills, then please consider giving some of it to a charity. That happens to be the one I'm chairman of with Lord Karan Villamoria. We're both co-chairmans. It's a charity set up by Lord Lumbar, which looks after widows and orphans. Anyway, there's my mum. There you go. So that's the number. Months you make more, you make less. I'll show you that maths in a second and which were the best time frames in a second. The recap, we're doing momentum. More than recap, I'll show you how to download in 1 second. You get the download in a second and the free gift. Okay, that's Goldman Sachs or whoever's moving the market. We are never in front. Remember that graph I showed you? we're getting in here once the trend has already started. We never get in here because we're not gambling. So we don't get in here because we don't have a crystal ball. We're not gambling. We don't try and predict what that point is. Okay, we are not trying to be Goldman Sachs. We're not trying to step in front of Goldman Sachs. We're trying to ride their bloody coattails. All success for everybody when they're starting out in anything they do in life is riding the coattails of somebody else. Okay. Thank you, Eric. My pleasure. My pleasure. That's all we're doing. I'll come back to sterling US dollar. It's not my favorite. It's not my favorite. But I'll come back to it in a second. Okay. So I've already told you how we measured momentum. Is the price closing near the high? We didn't have sophisticated software to do it, so we used multiple indicators, multiple timeframes, because it gave us an increased probability the price is going to move higher. Only trying to be a bit better than a coin, a bit better than 50-50. When you add that in with the other aspects of multiple timeframes price confirmation, you've got all the rules, multiple indicators, multiple timeframes, factorizing, price confirmation, then and that's price confirmation, has the price made a 2-period high, then you had the makings of a strategy. When you combine that with your volatility-based stop loss, volatility-based position sizing, obviously what we then did is shovel that into a computer. You don't have to, you've got the manual rules so that the computer told us. Okay, computer told us where the stop loss is, when to buy, when to add or take profit if you're a beginner, where the stop loss is. But you can do that manually. I've given you the manual rules for it. So we get the computer to tell us. We do not simply automate this. We still have humans who will pick the individual trade. We will pick the individual trade. Keshni said, what's your view on the Dow? We are currently short the Dow. I just said that. Okay. Next year it'll be up, but right now, we are short the Dow. We might be short until tomorrow morning. We might be short until whenever. We are currently short the Dow. You can see it on there, okay? That's our position on the Dow right now. Next year, I think it'll be up. That's not the point. How does it help you if I tell you what it's going to do over the next 30 minutes? How does it help you if I tell you what it's going to do over a year? You need to know consistently over that time frame. You need to know consistently. So I put all that together into the software. We created it. That became the very first algorithm out of 10 in the hedge fund. It wasn't mine. It was Bill Lipschutz's. That's me. When I interviewed him and perfected the algorithm, I used it to an award in the Financial Times. That's me in the FT front page of the business section. Patel is top FTSE 100 forecasting because I won a competition in the Financial Times using the algorithm. They then said, would you want to write books about this? I said, yeah, I want to raise my profile because now that I've won the competition, I want to set up a hedge fund. Set up a hedge fund, I need profile. To get profile, I need to be in the FT and writing books and all the rest of it. So it's what I did. That allowed me to set up the hedge fund. Licensed the algorithm to people like Merrill Lynch, HSBC. They, together with American Express and a few others, paid me $1 million, which is what it cost to set up the hedge fund. That's me in the very first set of offices. We couldn't afford Mayfair. We couldn't afford St. James's, which were the two places you had to be. So we went to Regent Street, Linen Hall. Okay. Guess who my next door neighbor was? The current deputy lieutenant, the Queen's representative. Anyway, it doesn't matter. Sir Ken Alyssa was my next door neighbor. Same floor in the office. Well, one hell of a floor that was. That's me writing in the FT about all of this. Okay. Maz asks, how can you tell when bankers are trying to bait retail traders to false up trade? Bankers don't give a shit about retail brokers, retail traders. Honestly, they don't. Right? They're not trying to bait you or anything. The only they don't give a shit. Do you really think Goldman Sachs sit around there thinking, how do I bait Maz? How do I do it today? Don't happen, right? They've got trades, order flow. They've got a whole bunch of orders from trillions of dollars of clients doing it. But they're trying to bait each other, but they're not trying to bait you. They couldn't care less about you. You don't have enough money. So people said to me, well, okay, bankers don't care about your stop loss. What do you think they're trying to do? Take £10 off you? You think Goldman Sachs is going to try to take £10 off you? They're not doing it. Your £10 they couldn't care less about. All right? The reason you avoid the whipsaws is what you're actually talking about, my friend, is how do we avoid the whipsaws, whatever causes it? So let's say that's the Dow. How do we avoid the whipsaw, the market going the opposite direction? We have a stop loss. That's it. Okay? Have you been whipsawed here? No. Right? If it happens on some of the trades. Did it happen because Donald Trump did a tweet or because somebody took you out? Well, clearly it doesn't happen every single trade, because if it did, you'd have 0 profitable trades. Clearly we know there are profitable trades because you only need to look at that. Clearly we know there are profitable trades because somebody must be making that one. It's there. Do it now, short it, and you'll know, oh, there must be some profitable trades. So it's just pure logic. Yes, there'll be a certain number. Okay. No, Goldman's view isn't always right. My whole point is, I'm just using them as a metaphor. I thought I said it's not about being always right. Anyway, it's about the fact that we're trying to make more money when we're right than when we're wrong. It doesn't matter whether you're right or wrong. When you are right, you make more money than when you're wrong, okay? My point is not that we're trying to get every single trade to be right and winning, and therefore every single trade is right. That is not the point. Never has been in this webinar, okay? Right? The point is that were we to get into a trade, we've got a stop loss if they are wrong and we are wrong, therefore, by implication. And I said already, they might be wrong 50% of the time. So how are we making money? Winners add to winners, losers add to losers. We're never adding to our losing position, so we know there's a limit to what can be losing, and we're adding to our winning position, so we know we're going to win from those. Okay, let me round it off. So people asked me, they said, look, why don't you do this for private investors instead of just keeping it in the fund? I said, well, it's not worth my while. And they said, no, but all these other people are charging thousands a weekend. I said, well, sorry, that's really not worth my while. It's not worth my time. It's not worth my energy or effort. Then Barclays came to me, a chap called Biku Aluwalia at Barclays Bank in London. Some of you might know, but if you're friends of mine, you'll know Biku, because you'll know he's now my best friend. And he said, well, why don't you float it? We'll help you at Barclays and spin off the technology and float what you're doing. And I said, that could be worth my while. That could be $1 billion company. There are, after all, global demand. I know from the books, there's global demand for me and what I'm providing. If I convert that into a technology, then surely there's going to be a global demand for my technology out of everywhere from, God knows, Korea, China, where my books have been translated to America and everywhere else. Then surely we've got $1 billion business. So that's what I did. I created the technology. You can download it if you wish. There's no hotel cost, no travel cost, live training, but not just the software. You get live one-to-one with me. Well, for the first 1,000 students, I take them in batches of 25 for the first 1,000. So if you want to be part of the first 25, okay, you don't need to worry about that. But, well, actually, no, let me put that in. Okay, it's not back-fitted. It's lifetime. There's no subscription. There's no daily fees, weekly fees, monthly fees, yearly fees. There's none of that. There's no subscription. It's yours for life, all upgrades. We're on version 4 of this because we update as we get more artificial intelligence data and calendars as well. Thank you, Dimpy. You have a Fabia. Okay. Amit asks, how do you pick trades? We get a signal, and then that's how we pick it. And we do one. Well, you should do one a day. We've got a team and more capitals. We can do as many as we want, but you should do one a day. So how do we pick it? See that? That's multiple indicators, flat to rising, multiple timeframes, price confirmation. You place the trade. That's how you pick a trade. The right instruments on the right timeframes. I'm giving you the instruments. I'm giving you the timeframes. You get the signal. You do it. That is that's our software version of the manual rules I gave you. I gave you the manual rules. The manual rules I gave you. Okay, that's the software part of it, and you then call your broker, whichever broker you want, broker independent, and you say, I want to do a spread bet, a CFD, a futures, options, whatever you want to do. We teach you all of that anyway if you want to learn. If you're a total beginner, I teach you that anyway. Mentoring from me, one-to-one, lifetime updates. Small gains, I'm afraid, yes. All currencies, indices, stocks, career options. If you want to become a fund manager, I'll teach you how. I'll connect you with all my LinkedIn networks as well, and help you and give you career advice if you want to do it full time. If you don't, you want to do it on the sidebar, I'll give you all of that as well. Without an indicator, this is what people are doing. With an indicator, this is what people were doing. After we gave people the indicator, this is what happened. We call it's our indicator. Okay, they had more confidence in the strategy, lower stress over losses. Business plan. I'll show you how to get it in a second. Wait. Just give me a second. Give me 30 seconds. Clarity events, clarity stop losses. We called it Project Predator. I said to my team in the hedge fund, initially we created it for our own domestic team. And because Biku was an investor, well, he brought investors into the hedge fund. He said, well, why don't you spin out the technology you're using in your fund, float the bloody technology company? Jeff Bezos, a hedge fund manager at DE Shaw, did it. He called it Amazon. Okay, world's richest man. So that's got me. I said, yeah, hell yeah, I'll do it. So we took the technology out, but we said, well, I don't want to do it where I want to stick to my principles and my values, which I don't want private investors paying anything for data, for software, for upgrades, for mentoring. If I believe it works, it should be me they're speaking to, which is why we had to cap it at groups of 25 at a time. But they've got me for life. Okay, why? Because I'm confident they're going to be profitable. If they're profitable, they don't need me for life, right? And we called it pipspredator. So that encapsulates the rules I just gave you and scans all the instruments and tells you the stop losses and tells you the money management and tells you when multiple indicators on multiple time frames are flat to rising and gives you, there's a 12-week course and a 30-day course. You don't have to do them, but gives you the software and that, and Zoom calls with me one-to-one and webinars on weekends. And the most profitable time frame we found that you don't have to do is the 1 hour, one trade a day, scanning 15 instruments, placing one simple trade. Thanks, Siddhartha. Number of trades in a month. I need you for 2 minutes and then I'll show you how to download it. Net pips captured, winning minus losing, 2,250 in a month. Some months it was 4,000. Some months it was less. Basically, the months you make more, you take off for the less. Best streak, winning streak, 70 out of 100 winning, right? Because guess what? Goldman Sachs get it wrong, don't they? Or Merrill Lynch or whoever. Worse was 30 winning out of 100. That doesn't matter. This is what matters. What's your net pips captured? 4,000 on good months. I think December and January will be like that just because of the markets. Fred, I'll come to brokers in the Q&A. I'll leave all the broker questions in the Q&A. Okay. So we first said, well, what if you did $2 a point? Way too much. $1 a point's too much. Well, just bear with me. 2 times 2,250 would mean 4,500 in a month. No, wait a minute. That's 10 times more than I said. We're going for 500 a month. So we didn't need to do $2. We could do 20 pence or 20 cents. And there are brokers which will do that. FCA regulated UK brokers. I'll come to brokers in a second. 20 cents. That was what was critical. So then that's what Biku said to me. He said, well, why don't you spin this technology out? Like if you float it, that's how you leverage the technology to make the money, to make your time worthwhile. Just like the iPhone, okay, don't charge somebody £1 billion for it because they can't afford it. Instead, float the damn company on the stock market and it's worth $1 trillion instead. Yeah, and everybody could still able to afford it. And so we use the same model, the iPhone model. Our algorithms are like the iPhone, mass market, but the flotation will make hopefully $1 trillionaire. Okay, because it disrupts the whole trading market. And we know the world wants to trade. I've got proof in sales. Okay, so we did that, and being a regulated hedge fund manager, we had no competition. There's nobody out there who competes with us. There's no competition. Professionally trained communicator, I'm a barrister and trained by Bloomberg. Bloomberg TV paid me for my TV show. Financial Times for my column. If you want to know, it was £1 a word for my FT column. Visiting fellow at Corpus Christi College, Oxford in behavioral finance, trained psychology, won the award in the FT, amongst others, but the FT is the most prestigious. No competition. Nobody's won an FT award. There's nobody who's got these credentials. Okay, so there's a lot of bullshit on the internet, but there's nobody with any credentials. So we call the others in the company. We call the others out there Ronald McDonald's. Put your names in if you want any Ronald McDonald's. Okay, thank you very much, Andrew, my friend. So the issue then becomes, can it make money? Is it easy? Yeah, well, I'll show you some more trades in a second. Is it easy? Yeah, you download, you follow the signals. But we also show you, we train you on trade selection, which is important. I look over your shoulder. You send me yours one-to-one. I am your tutor. For the first 1,000 in batches of 25, I am your tutor, and you've got me for life. Okay, you don't go away. Okay, if I get less than 3 emails in a day, my secretary allows me to take on my next batch to train up. Okay, Euro-dollar 5-minute bars, 3 hours, 75 pips, including additional positions. This is one of my apprentices, full disclosure, not me. One of my apprentices sent me in their trade 75 times. Why was he doing $30 a pip? Because he's experienced. He's experienced. He's profitable. He's rich. Okay, so he's increased his trade size. Right? That's when you increase it. That's when you do it, not on day one. Okay? Not just him, there's others. The best endorsement we've got for pipspredator and what I do gets to the heart of the matter of trading by clearly elucidating methodologies of successful trading strategies. Clearly elucidating methodologies of successful trading strategies. The chairman of the Chicago Board of Trade, the world's largest exchange. Not Mrs. Smith from Croydon, not Mr. Smith from Manchester, okay, which is what people on the internet will have. They'll have fake actors and comedians on there, members of the public. It doesn't matter. I don't give a damn, in one sense, what members of the public think, because what matters is what the best in the world think about the product. Okay, and of course I want the public then to love it. That's the easy part. That's the easy part. Don't worry about this. this is it with an indicator. So we combined all the other indicators. It scans and we use it on currencies and equities, whatever will trend, and we trade select. Okay, there's a 30-day money back guarantee. For trying this, you're going to get a signed copy of 2 of my most recent books. 2 of my most recent books, physical hard copies, signed and delivered to you. Earphones to listen to the video tuition. You're going to have me training you, okay, as well. But there's a 12-week course as well. You don't have to do the 12-week course. You have to do the 30-day course. It's a no-quibble money-back guarantee. So if you don't think it's for you, keep the books, keep the headphones. The headphones are like the iPhone headphones. Keep the phone stand. Keep all of that. Keep the journal, trading journal you get as well. You get a hell of a lot of stuff. Keep all of that, okay? There's the guy. It's his brain. He's going to IPO it. Barclays, he used to work out. He then took the pipspredator, clever bugger, and left Barclays. And because he earns more money from this than through Barclays, so he left. He now lives in Dubai tax-free, and he uses the pipspredator. I now spend. This was all his brainchild. I've never had a clever idea in my life. I don't think this was his brainchild, including the name. And then he used it himself. Left Barclays, but. Yeah, so thank you, Biku, and all the rest of it. That's my most successful student. She left university, became my assistant, and worked for me, and then left for Newton, where she manages 10 billion. Okay, simple as that. 25 people, the first come, first serve. If you want this, you want to trial it for 30 days. It's yours for life, but if you want to try it for 30 days, including the course material, you don't have to use the course, but the software, most importantly, and one-to-one with me. How many one-to-ones? As many as you want, because I'm confident you're going to be bloody profitable. So you can have as many one-to-ones as you want, right? If I can't get you profitable, nobody can. If I can't get you consistently profitable, nobody can. Okay. I asked 2 things. One, you give an honest review to the venture capital investors in the company, okay, because they need that. It's part of the conditions of their investment. And secondly, on this, that you're enthusiastic. That's all I asked. It's not a precondition. It's just enthusiastic. Okay. If you want to sign up, it's first come, first serve. So get ready. First come, first serve. So if you want it automated, everything that I've taught you, you can do it all manually if you wish. You can leave now and do it manually if you wish. But if you want to do it automated and use the software that I've created to do it automated, that's what it is. If you want to save time, you want me mentoring you, teaching you, it is a one-off cost. In future, not for you guys, it'll be £2,000 a year for the mentoring, £2,000 a year for the indicator. Next month, the price is going up. It's going to double next month. But for you guys, for now, it is a one-off fee, okay? There will be there's no upsells. Kavita, there's no upsells. Michelle, there's no additional cost. There's no subscription cost. There's no data cost. All upgrades are included for life, okay? Why? Because I want you to get profitable. The more of you get profitable, the more value, the higher the valuation my company has, okay? The higher the valuation my company has, the better off I am anyway. At it. Thank you, Ravi. My pleasure. And thank you for the present as well, the gift that you sent me. Yes, Amit. Let me ask a brilliant question. Is this for me? I'm a beginner. It was designed for beginners. It's designed for beginners. There is a manual. There is hand-holding from me. We've got another hedge fund manager, Paresh. There's hand-holding from him. We've got an installation team. It takes more than 10 minutes to install. I would say 50% of the people on here are total beginners. They've never traded before. The other 50%, which is why I say demo accounts. Okay, I'm going to look over your shoulder because you're going to send me your trades. There is a program. When you go on there, alpeshpatel.com /here, you will see this. Clear buy and sell signals, all currencies. So we use this on different pairs, but we'll teach you trade selection. The most important thing about trade selection, by the way, we have a Telegram channel on which I show you on Mondays, Wednesdays, and Fridays which trades we're focused on. Okay, which 5 to 6 trades we're focusing on. So it makes it even easier for you. Okay, and you're going to start off as a beginner with a fixed stop loss and a fixed take profit. So yeah, as you start, let me know. To use trailing stop, step stop means having to keep a close eye on the chart and amend accordingly every few bucks. No, the broker does that automatically. You don't do it. The broker does it. The online, you've heard of computers, Harinder. The broker does your trailing stop loss automatically. You don't keep an eye on it. I don't want you to keep an eye on it. I mean, feel free. Go to alpeshpatel.com /here. But, you know, don't faff around because I expect everything to go. This period is always our busiest between Christmas and New Year's Eve. And the reason is people have got more time to spend learning and they get stuff done. Thank you, Erin. My pleasure, my friend. My pleasure. Amin, feel free. Okay, it is lifetime mentoring and it's from me only for the first 1,000. You're the charter group in Bachelor 25. Obviously, as we go global and it becomes, you know, we've got Singapore, and I've been out to Singapore to set up the office there, India, Australia, New Zealand, Japan, Hong Kong, all the countries, with the exception of Australia, I've not been there yet, but all the other countries, US. Obviously, I won't be the mentor, but for you guys who are signing up, I will, because you're part of the first 1,000, okay? Full online training course, there's two. There's a 12-week course, that's where you start off with, and I'll show you that in a second. Now, the reason it says hurry is very simple, okay? Somebody said, oh, God, it's so in your face. My web designer said to me, Mr. Patel, if you want people to take action, you have a big yellow bar with a big arrow pointing at it, and you write hurry. Because otherwise people faff around and then they turn around to you the next day and say, oh, Beth, I missed it, then it's Beth's. I go, sorry, mate. And then you end up doubling your price and they go, oh, no, can I have it at the old price? And it's just not worth my while. Brilliant. David's asked an excellent question. So, Amit, how much time? Amit's asked how much time do I have to decide on this? Well, until the offer goes. Basically, 16 minutes, my friend, because I suspect that's when all the units will go. That's what usually happens. I'm just following a trend on what's usually happened. David, when and how much time? But you got 30-day money back guarantee. And I should say, where's my video gone? I'm a public figure, so don't worry. I'm not going to mess you around. Just let me know in 30 days if you're not happy. For any reason. You don't have to have done any trades, done the course or anything. So I'm not going to mess you around. I'm not here to sort of say to you, I'm not like a TikTok person where it's like, who's that person? Who's that? That's why I show my face on these things. Okay. But what else do I have to say on this? Oh yeah, PayPal works as well and all the rest of it. I've got to show you the website. We're so proud of our private members mentoring website. And I'll tell you why. We've got a community site where you can ask questions and see answers from others and so on. We've got a 12-week course and a 30-day course. Start with the 12-week one. It doesn't take 12 weeks. You don't have to do it. Because actually, to be honest, if you do the manual, you don't need to do the 12-week course. The reason I created it is because I had a group of people who said, no, I really want to learn more. I want to be a hedge fund manager. I really want the details. I want more substance. So I created this. Why? Well, because I had the content already. I'm an author after all. So I've got a ton of content. I speak publicly around the world. So obviously that was a straightforward thing to do. Alpesh, how much time? Oh, sorry. How much time is required? I would say if you're doing it with me and you're sending me your trades, I would say initially, if you're a total beginner, about 30 minutes a day. Read the manual, spend 30 minutes. Spend an hour if you can for the first week. After that, you should take less time. You don't. My whole point with this is I'm not teaching you macroeconomics. You don't need to know it. If I was doing that, you'd need to spend more time. You might say, wait a minute, week 3, I've got to go through all this. No, this is if you want to learn more, like, you know, things which you don't need to make money. But if you want to know more, like, what is it that hedge fund managers do? How can I do this? Amit, if you're in the UK, there's VAT. Look at the it'll charge VAT if you're in the UK. Okay, so if you click here, if you're not, then there's no VAT. So it all depends whether or not you are in the UK. There you go, or wherever else. You can split pay as well. So there's VAT. It'll automatically detect on your IP. So if you're in, for instance, we've got people in Australia or whatever, there's no VAT. So that's what it is. You put it in there. You can do split pay. Don't do annual payment. Somebody once asked to pay annually. I said, why? It just didn't make sense. I might even remove that option. But anyway, you can split pay. You'll still get access to it. It's 1,000, and the second is due in 1 month. Or you can do that. There's VAT. As I said, I'm afraid it's the law. We can give you a VAT invoice if you've got companies. Now, some people do this with their wives. That's fine, or their husbands. Others do it for their kids or with their kids because they say, well, we want you to have access to Alpesh, and he'll advise you. And that's fine as well. Okay, so when you go there, there's the 12-week course. I've got to show you the community site. That's where it is. You can type in any question or just email me. Okay. My latest views on what we're looking at is on there. We've got a Telegram channel. We've got WhatsApp as well, one-to-one with me and my team. So if there's any question, and there's all this. Now, you don't need to do all of this. Like I said, you can just do the manual, download the software. It takes 10 minutes to download the software as well. Okay. Why have I created it? Well, everything that I've told you that's important about trading, which has been condensed from all of this. Oh, and let me know as you sign up, please. I'll give you more shout outs. Nicholas, you're through. Jonathan, you're through. Kishan is through. Amanda is through. Dave. Yogi, you are through as well. Rajesh, you are through. Oswald, you're through. Okay. Now, the other aspects which are really important about all of this is, oh, sorry, you can't see that screen. Let me move it across. Down. There's the down. The other aspects of this is on version 4, because we keep amending things based on, we get artificial intelligence, we improve things a little bit, might tweak it a little bit. All upgrades are free for life. There is no, all this data is free for life. All the mentoring from me is free for life. Why would I give free for life mentoring? Alpesh, why would you do that? Because I know the product is amazing. And the only way to, when you've got an amazing product, you actually almost want to strangle people and say, for God's sake, it is too good. Buy it. It's just so good, right? So the only way to do that is to put a noose around your neck by saying, you've got me for life to mentor you. Why? Because you won't need me to. Somebody said to me, how are you going to get the time? I said, if you're profitable, do you think you're going to bother me? No. And we've got proof of it. Yes, I've done it, but I've foggiest what to do now. Oh, Amit, I'll send you the password. It takes 10 minutes to download. If you can't download it, we'll do it with you. I'll send you the link where we'll have our first call, calendar link. So you get direct access into my calendar. You schedule a time suitable for you, straight into it. So I'll send you an email. Give me about 5 minutes, Amit, and you'll get that now. Andrew, oh, thank you. Thanks, Andrew. I love that. I'm going to post that to everybody, broadcast that comment. Thank you very much, Andrew. Andrew, remind me your surname, because we've got quite a few Andrews as well. Don't worry, Amit, we will walk you through it, okay? Because sometimes people go, oh God, I'm really happy. What do I do now? Okay, honestly, we handhold you, and there's a very simple reason, Amit. I have got about £1 billion at stake, right? If you don't become successful. Very simple. I don't know how to get an IPO if you're not successful. All right. So you better believe I am highly motivated. So we'll take you through all of this. Keshni, congratulations. Welcome. You're through as well. You are indeed. We can see that. Thank you. And I'm very excited you're through. I'm going to get an email from you as a first stage. I'll tell you what else is going to come through on this. Oh, by the way, these are some of my selected past and present clients. I can talk you through all of these. Yeah, I'm trusted by the best. You can see why it made sense. And Bhikkhu said, you've got to spin out a technology company. And he was so right, because tech is the way billions are bloody being made. Okay. And then you can see it anyway. It's all there in terms of that. So we've got those and the precise entries. And by the way, this is just the automation in a way of what I told you in the webinar. So I don't want people to think, oh, you didn't tell us the secret rules. I have told you all the secret rules, how much money, where to go, what goes in, and everything else. This is what some of the biggest peers have said about me, as well as public. Okay, Mike put it that way. You're one of the good guys. Probably the best compliment. Anyway, there's a whole load. There's a ton of reviews there on there. And we've got more coming up. Co-chairman of CNBC, the lid of the trader's black box has been lifted. CEO of American Express Share People, Alpesh is born authority commentator, chairman of the Chicago Board of Trade, Barclays Stockbrokers over there. And there's a whole ton of reviews if you were to click on that. How to get started? Well, I'll show you that anyway. And there's a whole bunch of videos on there. Like I said, trading is what made my life. If it wasn't for trading, and that's why I'm so passionate about it, and that's why I want to share it with everyone else. And we found a way through this technology to be able to do it. David said, I'm a bit confused by earlier on your example screen when you have an earlier advisor, RSM at the rubbish. Oh, so David, now let me explain. No, what I mean is no one indicator works all the time. So the MACD doesn't, the RSI doesn't. So what we did, and what Bill Lipschutz said to me is, make an amalgamation of all of those, and only when multiple indicators are flat to rising, i.e. showing a buy signal, and across multiple timeframes, and with a price confirmation, right, do you then, and the pipspredator is a bit more than that, but I'm keeping it a bit simpler for you guys to explain it. Then do you have an entry signal? Okay, then do you have an entry signal? By the way, Rothschilds wrote a really nice piece for me. I've given talks for the Rothschilds and Dominic, plus, there we go, on there, wrote a very nice thing. What I want all my apprentices to do, by the way, what I want all apprentices to do, any other questions about it, let me know. All my apprentices there. You see that where it says LinkedIn? I want you all, my apprentices only, please, because I've got limited capacity. please connect with me, apprentices. The reason is, if you want to do due diligence on anybody on the internet, go on their LinkedIn. Because on their LinkedIn, if they've got endorsements and connections and interactions with the CEO of the chairman of Goldman Sachs Asset Management and the CEO of Barclays and all the rest of it, you've got some additional due diligence, at least on the person, okay? That it's not just somebody who's just come out of nowhere, okay? But you'll also see the other work they're doing. I mean, I haven't mentioned my work that I do with the UK government to bring more technologies, because I'm quite a big deal in the field I'm in, okay? It doesn't sound too arrogant. So with the government, I bring technologies into the United Kingdom as a result, okay, for that reason. You can see why the building blocks are I want to do the IPO. Thank you, Amin. Welcome on board. Delighted to have you on board. You will not regret it. Andrew, can you discuss how brokers work and meaning of no dealer desk? Yeah, absolutely. No, I love that question. I'll do that as I go through all of this stuff. So Andrew's asked how brokers. So what brokers used to do is they used to be like estate agents. They match a buyer and a seller. Simple. Then brokers realized, hang on, they said to themselves, hang on, why should we do that? Why should we match buyers and sellers when traders get it wrong so often? So let's be like the casino. Let's just take the other side of the trade. So the way brokers make their money is this. They will have a spread. They'll often say they're commission free and they'll have a spread. In actual fact, very often the ones who charge a commission and a narrow spread are better value for money. It's just psychologically people don't like that. But anyway, that's a by the by. So they just try to charge a spread. Like Thomas Cook charge you a spread. They say we're no commission, but have you seen their bloody spread between a buy and a sell price when you're changing currency at the airport? So what they do is they charge a spread. Now, what some of the sneakiest brokers do is this. Because they're like Del Boy at a market stall. When you want to go back to them, let's say you bought something at 100, you want to go back to them. They'll turn around and say, oh, well, Mr. Patel, I'll only give you 101 for that. And you say, but the market price of the other brokers is 110. And they go, yeah, so, because you can only transact buy with them. So they'll manipulate the price to some extent. They can't overdo it, otherwise they'll get a bad rep. But they manipulate it a little bit. Not too much, a little bit, the bastards. Okay, that's what they do. No dealing desk. What they're trying to sell you on there is, oh, we just send it into the market. We're not going to go look through and check that, are we okay with this, and manipulate it. What they're trying to claim is they're not manipulating. They don't need a dealing desk in order to manipulate you. They can have algorithms to do it. Okay, so what you actually want are ones who do straight through processing. Now, there's very few who do that because they've got to then make it on the spread. One way or another, they're going to get their pound of flesh, okay? So the best advice is open accounts with 3 different brokers, place the same trade with all 3, entry and exit, okay, and see which ones cost you the most money, and then you know which ones to get rid of. That's the best way to do it. It's the obvious way to do it. It's the easy way to do it, okay? I would suggest have a look at InterTrader. Some people say they don't like ETX, they don't like FXCM. I can understand why. Up to you. But I'd definitely say, I mean, feel free to have a look at IG and the ones you've heard of, CMC, Saxo as well are good. You know, when I say good, they're not going to steal your money, but they're all going to play the same game with you. But they're nowhere near like what the charlatans are like. These are not charlatan brokers. They're just going to make their money. I mean, there's a reason CMC is $1 billion business. Okay. By the way, for my hedge fund, my first chief financial officer, I poached from CMC. He was their chief financial officer, and I took him. And anyway, there you go. So instant download. You'll get. I mean, everyone else who's mentioned. Sabi's asked about a broker in UK. I don't know them, so I'm afraid they're not on my approved list. I don't know that broker. I don't know it, so I'm afraid they're not in my approved list. Email me and I'll check if they're FCA regulated or not. Full customer support. Got 24/7 helpline, but 10-point brokers. Fred, FXCM do, and some of the others allow you to do it. Like, for instance, if you got IG, you can do CFDs. IG are not the only one. I think the City Index, Saxo will. There's others which allow you to do it, not on a spread bet. You can do it on a CFD. They're exactly the same bloody thing. Okay, it's just that they're written in different language. They're exactly the same thing. Okay. Oh, the sign up. Sorry. I've blocked the blooming sign. Sorry. There should be a space left. I think there's 1 or 2. If there isn't, if your transaction doesn't go through, it means there isn't. There's the link. Okay. Any other questions? Ask me. I'll stay as long as you need for me to ask questions. And the way I'm going to look over your shoulder, you're going to look over mine. You're going to look over mine because I'm going to show you the trades we're focused on. I'm going to look over yours because you're going to send me those trades, and we're going to do webinars as well. There's 6 live webinars each week on Saturdays. There's a webinar on every Saturday on 11 a.m. on stop losses, 12 o'clock on entries, 1 o'clock on limit orders, 2 o'clock on trading psychology, 3 o'clock on money management, 4 o'clock on adding to winners. Okay, so you've got that. So you've got lots of ways of communicating with me. You've got WhatsApp, Zoom, my calendar, special private calendar link, email, calls, okay, webinars just for you guys. All right, emails. I mean, think of anything else. Are brokers okay? Raj, they're not on my list. I've not heard anything negative. I don't know who they are. I've heard of them, but I don't know. On the whole, when you've written all these books, you get to know all the brokers. I've not met them. So I'm going to suggest at the moment, because I've not met them personally, and I don't know if they're FCA regulated, okay. It's just that some of the ones you guys will come up with will be the really aggressive marketers. And it worries me sometimes because everybody can be a broker now. So I don't know that one. Any brokers or gurus or anything you want to ask me, feel free. Oh, got Skype number as well for my apprentices as well. I'm going to schedule that in. I think that's it really. If there's no other questions, whoops, what just happened? There it is. I don't know, it's playing up. Okay. Dropouts versus profitability. In week 1, I would say roughly you might get 1 dropout a week on average, just because they say trading's not for me. Alpesh, thank you very much. I think the business plan. Profitability, straight away tonight, there'll be about 25% of you who've signed up will be profitable straight away, because you will look at, you've traded before, you've already got everything set up, you've got your broker set up, you can download the indicator, you install it. We'll install it for you if it takes more than 10 minutes. Hargreaves are for investing. If you're trading and they want you to trade, they're not suitable for trading because they're almost what you might call a traditional broker. They have higher commissions. So you really want a trading brokerage, like I said, a Saxo, ETX, Intertrader, IG, CMC, that kind of thing. And I'd probably say CFDs are easier to understand than spread bets. You might say, why? More tax efficient as spread bets. CFDs are what hedge funds use. Believe it or not, can you believe people go, what? Hedge funds use contracts for differences. We use contracts for differences. Obviously, not with a retail broker. We use what's called a prime broker. But the point is, we use contracts for differences. You'll find it's a bit easier to be profitable on CFDs. It's just a quirk of there's technical reasons, but it doesn't matter. Andrew, great advice. Thanks, Alpesh. Looking forward to trading with you guys in the year. Have a great year. Thank you, Andrew. Thank you. Keshni. Australian. Keshni, which country are you in? If you're in the UK, why aren't you using a UK broker? Interactive Broker are fine. Yeah, absolutely. I forgot to mention them. They're fine. They're fine. Interactive Broker are fine. Pepperstone, I don't have an issue with as well. Listen, guys, I better go. Okay, I've got a whole bunch of apprentices to deal with. How do I mentor? Well, we've got a Telegram channel where I'll show you what we're observing, so you can't get it wrong. There's a manual. There's a 12-week course I've shown you. There's a 30-day course. There's WhatsApps with me. There's Skypes with me. There's Telegram channels. Basically, I've thought of every single way. South Africa. Okay. Well, Australia is a good regulator, so you should be all right, Keshni, with them. You should be all right with them. Bad intention. Will I get an email with details regarding access? Yes, absolutely, Keshni. You will. Oh, Keshni, you will have so many ways to get access with me. Don't worry. Do not worry. You'll get an email. You're going to get a WhatsApp. We used to send text messages as well, and then we thought people are going to get a bit pissed off. Not just one email in case it goes into spam. Apprentices, everybody signed up. Please check your spam folder as well in the next 20 minutes or so. I'm just going to have a drink of water after this. And also, I really want to look at what's happened with the Dow because I'm excited about it. I'm happy with it, but I'm excited about it. So there's that as well. What else was there from today that I've not done that I should mention? I'm not sure what else I should mention. But does anybody? Well, we're long sterling US dollar. Okay. What other views points could I give you? We're long sterling US dollar. If you want a long-term view on cable, I guess, yeah. Okay. Wait a minute. Cash. This is a long-term view. I don't use this, but this is the sterling US dollar daily chart. And yes, it doesn't take a rocket science. It's been long on that. Hi, XTB is FCA regulated as per their website, but it says 80% can't lose money. Whoa! Owanda's fine. I don't have a problem with Owanda. They're honest. 82% lose clients. You know what that means? It means they've been a bit greedy. They've been taking more off their... Don't. 82%, forget it. If somebody is more than 75% of their clients are losing money, stay clear. More than 75% of their clients are losing money, they're ripping them off. Okay, stake at 82%. That is greed. Okay, that is greed. Helena, we use MT4 because it's simpler. We're going to make an MT5 version for free for apprentices. Okay, all apprentices will have it for MT5, but we prefer MT4 just because it's ubiquitous. Oh, by the way, one really important point. When you get your signal on here, you don't have to trade through MT4. You do not trade through MT4. You're not going to click buy and sell on MT4. I suggest, because it's a lot easier, unless you like trading on this, I suggest you just place the trade on your phone with your broker's normal platform or another broker, whichever broker, okay, not through the platform. Why? Because I think it's simpler and easier, unless you're comfortable doing it that way, unless it's simpler and easier, okay? If you've got a company, yes, indeed, we can send you a VAT invoice or VAT registered, okay, as an entity where VAT registered, okay? That's okay. Now, unless there's any other questions, let me just turn off the screen. Unless there's any other questions, I'm going to leave it at that. Let me know if you've got any other questions. I'm giving a webinar tomorrow on investing. Investing is different to trading. Webinar tomorrow is on investing. I hear a lot about it, Jose. I personally, I wouldn't pay for it because you've got everything else. The overcomplication that paid software where you're paying a subscription fee, and I think it's pretty expensive, is too much. I mean, you'll get an email from me for the login details, and we'll arrange a call, and you'll get a WhatsApp if we've got your phone details. If we haven't, don't worry, you'll get an email. Give me about 20 minutes to send you an email because I'm going to have a drink of water first, Amit. And as I get through all the apprentices, there's about 25 on here, then obviously you'll get the email in 25, 30 minutes. Okay, Amit? So just let me know you heard that, Amit. You're going to get an email from me, and all the apprentices, you'll get an email with all the login details for the download, the manual, access, passwords, usernames, private mentoring, Telegram channel, my private email address. Yeah, you'll get it from my private email address as well. So you've got that one-to-one connection, and you'll have my WhatsApp, which means my Skype phone number as well. So you better call me as well. Thank you very much. Thank you, Bernie. I appreciate it. Thank you, everybody else. I'm going to leave it at that. Thank you all. Unless there's any final questions, I don't think there are. I'm just like, bloody hell, I need to get my hair colored. And that's what that picture reminds me of on the webinar. I appreciate it. Okay, and I'll leave it at that. Goodbye. Thank you, Edward. Thank you, Jose. Any questions you got, Edward, let me know. I think you're on the program, aren't you? So let me know if that's Mr. Yes, you are, Edward. Please, Edward, message me any calls, any emails, schedule a call, anything at all. Sammy, thank you. Thank you. Yeah, age, I guess. You're absolutely right. Appreciate it all, everyone. Welcome. And yeah, I did a slightly different format today. If you liked it, let me know. I sort of almost did it back to front, if that makes sense. I didn't necessarily talk about Brexit and Trump and pontificate on the markets. I cut to the chase of how we trade instead. So let me know if you preferred that method, or if you'd rather I pontificated on the broader markets and talked only about how we get our entries right at the end. I told you the entryway right at the front instead, so let me know. But thank you all very much. Have a very Merry Christmas. Stay safe with all this stupid virus going on. God bless you all, and Happy New Year. If I don't see you on tomorrow's webinar, Happy New Year to you all as well. I really appreciate it at this difficult time of year for everyone. So thank you all very much indeed. Thank you.